Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, February 25th, 8:46 a.m. And I guess we are continuing the second day of a pretty nasty sell-off. Technically third day, because it started on Friday, continued last night. And in the pre-markets, we're kind of seeing some relief in some areas. In other areas, not really seeing any relief. But we are definitely getting a little bit of pain across the broader market. Bitcoin was the one that surprised me this morning. I'm sure a lot of you guys woke up. If you guys are exposed to Bitcoin or just in general, keep an eye on it. We have not seen Bitcoin get to these levels in the past couple of months. And what you're looking at right here is below 90K on Bitcoin. Now, at one point, it got to 87K. So it got really bad, I think around like 5, 6 a.m. But still below 90K right now. Would not surprise me if we get back to some of those levels. Actually, 86.8K was the low for what we got on Bitcoin. Right now, we're currently at 89K. This is going to be an important market open because we got a couple things going on. Number one, Palantir is actually bouncing in the pre-market along with Nvidia. Kind of surprising to me. Did not expect Palantir after going down 10%. It was at 86 last night to be at 92 right now. So there's some reason, whether it's technical, macro, some headline that I'm not familiar with for why Palantir and Nvidia are bouncing. But I think the 9:30 market open today is going to be incredibly important because Nvidia's tomorrow. We're going to see how much momentum the market feels Nvidia will have. And we're going to talk a lot about Nvidia today and kind of deep dive on the bull and the bear case on what I expect on this earnings, what the sell side expects on this earnings. Number two, the broader AI trade is in question. And I think a lot of people are hesitating to believe that the AI trade is still real. It makes sense that there's going to be CapEx. And as a result of that CapEx, there's going to be an ROI. So we're going to talk about the implications of that. I think all of that kind of gets decided tomorrow after Nvidia reports. Number three, yesterday, I think I found out after the market closed why we kind of had so much pain. Trump confirmed the tariffs on Mexico and Canada yesterday. Like he said, they're like legit going through. Now, can the market definitively say that's happening? No, but that's what Trump said. So I guess the market's interpreting that that's happening. And as a result, that tariff news, I think, is what really shocked the market last night if we were trying to kind of pinpoint a reason why we had some volatility. And so I think today is a continuation of if the market believes in that tariff news and if that continues to happen or not. And then finally, I mean, look, I think everyone can agree we were due for a little bit of a technical correction, just given how fast stocks had run. Palantir got to 125. HIMS got to 72. We'll talk about HIMS as well. HIMS is now down 21% at $40. It did hit $39 in the pre-market. So a lot of these retracements are still leaving you up green year to date by a wide margin. Palantir still up almost 20%, HIMS up still almost 50%. But we went up too quick and we went down just as quick. Now the question is, do we continue to go down or do we bottom out here? Do buy or step in? Something like a Rocket Lab, which I'm probably going to buy a little bit more of going into earnings, 2162. I mean, this thing was holding at 29 for a good 3 weeks, basically just collapsed with the rest of the market. Does this find support? Does this find a bottom, or does this continue to bottom out below 21? I guess we'll find out. And this day is going to be really important, especially because it's before Nvidia earnings, to kind of see how the market takes it, where the macro goes, and how a lot of these stocks ultimately react. Bitcoin right here below 89,000 now, 88,884. $350 billion have been liquidated from the crypto markets over the past basically 48 hours. So definitely been pretty aggressive when it comes to what's going on in the context of crypto. And as a result, Fartcoin and all these kind of meme coins have also been just destroyed because Bitcoin fell as well in the past 2 days. Rocket Lab earnings is on Thursday, so we will talk about that going into Thursday. We have Nvidia earnings tomorrow. We have Salesforce tomorrow. We have Snowflake tomorrow. Yesterday, we had earnings of a couple of different names. Let's just look at those real quick, and then we'll get into the first topics for the day. We had HIMS, which is down 21%. HIMS, I mean, I'll talk more about them in depth. I thought they had a great quarter. I think the stock is just down because it ran up too quick. And there's a couple of pieces of analysis for why the quarter was so good, in my opinion. Not buying the HIMS dip yet. Again, I'm just like not that interested in the sector, in the company, but it has definitively gotten cheaper from where it was trading, given the growth that they put up. So I think they had a good quarter. Zoom is down about 5%. They also had a decent quarter. Riot's down about 3%. They had a great quarter as well, but Bitcoin's down, so Riot's down. Tempest AI had a quarter. They got downgraded today, down 13%. Again, I think the reason this got to $70 is because of Nancy Pelosi. They double missed. It was a slight miss, but it is a miss. And so this one's down about 10% in the pre-markets. And then Realty Income down about 3%. Not a bad quarter either, 6% dividend. But that one is also down 3% as the broader market is falling now. Also, SMCI. We got SMCI today. That's going to be important. SMCI has not filed yet. I imagine they're going to file by 5:30 today. I think that's the deadline. Their stock was up 3% in the pre-markets. Now they're flat. So for anyone holding on to SMCI, and quite frankly, anyone holding on to Nvidia like myself, I feel like SMCI needs to file, and I really hope they don't ask for an extension. I have some due diligence I'm going to share with you guys that Kris posted this morning about why they're more likely to file than not. But yeah, we will find out about that at hopefully 4 p.m. or hopefully before 4 p.m. when they end up filing what's going on with SMCI. All right, cool. Lot to talk about, lot to get into. Thank everybody for being here today. Let's get started on the market open. Alex June, good morning. Good morning. Thank you everybody for being here. Mario, what's up? Michael, what's up? Sitting over half cash. Let the bodies hit the floor. Well, look, if you have 50% of cash, I'm sure you are feeling very happy right now, at least to start nibbling at certain levels versus feeling that you don't have any cash to get in. Martin, good morning. Rockin, good morning. Victor, Muram, Amato, Mario, Nicola, Walt, good morning to everybody being here. Brent Boss, what's up? Breakfast pizza. I don't think I've had pizza for breakfast in a long time, but thank you for, I don't eat breakfast anymore. Put in the chat if you eat breakfast. I have some tea, but I don't think I've eaten breakfast in a while, bro. Like, unless I'm traveling, like I maybe pick up Starbucks. So I just never end up eating breakfast. Romarios, hello, Mitt. Respect all the way from Romania. I love it. One day I will go to Romania. I know Romania because of, I'm going to butcher it, but Bucharest, that city in Romania. I know Michael Jackson performed there. That was like one of his most famous performances. Like 100,000 people that were there at that stadium. I don't know how to. Is that the city? Is that the capital of Romania, Bucharest? I'm definitely saying it wrong, but that's how I know Romania. So thank you for being here this morning and being part of the show. Yeah, I said it wrong, right? I don't even want to know how wrong I said it. Alberto, good morning. Alfredo, good morning. Timothy, Rigidity, Duff, Aditya, Nicola. Thank you, everybody for being here today. Let's get started. All right, so I think let's get started with this first piece of news to kind of get things going, and then we'll keep going from there. I think we should get started with HIMS. HIMS is kind of the most important earnings that we had yesterday. I'll find out how to say it in a bit, dude. I had to butcher. I had to butcher that so bad, dude. Come on, there's no way I was gonna get that right. Burkachest, there's no way. There's no way I was gonna get that right. Okay, HIMS. So first of all, if you're a HIMS shareholder, let me know in the chat if you were buying this dip. I thought the quarter was really good. 481 million versus 470 expected. They beat by 11 million on top line. 11 EPS versus 11 EPS. They came in line with expectations. 1.5 billion of revenue for the fiscal year 2024, growing 69%. I mean, it was a hell of a quarter, or a hell of a year for the company. And then 2.2 million subscribers, that's up 45%. Now, they guided for $2.3 billion of revenue. The street was expecting $2 billion of revenue on the guide. So even on the guide, I think they did phenomenally well. Stock, however, fell 18% after hours. The reason the stock fell 18% is for, I think, a couple reasons. Number one, the street is not convinced that they are going to be able to keep up the revenue growth outside of GLP, which is kind of weird because they guided for good revenue growth even without GLP revenue being factored into the guide to an extent. So to me, I don't know why the street's freaking out that much about that, but that's one reason the street is confused. And I think the other reason is just because some of the sell side reports I read this morning, particularly from Bank of America, JP Morgan, that like have their price targets in the mid 20s, they just don't believe this is sustainable. They don't believe, I mean, when you really read the report, they don't think there's a moat. They think there is easy commoditization, even though the whole personalized medicine angle is what HIMS is going for as like their kind of core thesis. And then finally, they think the stock just ran up way too quick. It's actually very similar to what Bank of America issued on Grab a couple quarters ago when Grab went from basically 4 to 570. Bank of America was like, hey, take your profits. This is too quick. That's kind of the same thesis they're saying on HIMS. Now, granted, HIMS has a lot more momentum, has a lot less shares outstanding, has a higher short float. So you can definitely see more retail engagement versus a company like Grab that has a lot more shares outstanding. But it's the same argument that it ran too quick. It doesn't deserve to be running this quick. And as a result, it's time to take some profits. They've also always been bearish on the company as well. So they're one of the more bearish sell side analysts that exists. Here is some analysis from a account on Twitter that I like to follow for some stock market content. And I thought their analysis was actually really strong on this as well. So here is some top of the mind math they did in regards to the quarter. So 2025 full year revenue guide of 2.3 to 2.4 billion, which takes into account GLP-1 shortage removal. This number is actually ridiculous. 725 million from weight loss in 2025, essentially baking in 3x growth in weight loss revenues after GLP-1 is removed from the shortage list. The stock reacted badly, which this person said, I don't understand, but the same thing happened the last two earnings, which let them add at 15 and 22. The short thesis seems cooked here. Shorts thinking 1/3 of revenue goes away after shortage lifted, yet the guide is 3x what the shorts are assuming the revenue would be down if you had removed the guide or if you had removed the shortage when it comes to GLP, which means HIMS is basically saying we are going to organically grow without it. And that is why theoretically the argument still is that it's cheap. So the bear case is that if you have them hit the guide in 2025 and then decelerate to 20% top line growth, you end at 25 billion in annual revenue over the next 5 years. That's about 15 billion with a 10-year discount, which gets you $70 a share. And obviously, I know we got to $70 a share a couple of days ago, which again, it makes sense why it's down from 70 because that was just really, really quick. But you have some basic math that you put in these assumptions and you imagine that they're going to be able to keep up this growth rate. Right now, they're growing 69% year over year. You assume over the next 5 years that decelerates down to 20%. HIMS ends up being one of the more cheaper stocks on the market. I mean, it's going to open at a market cap of 9 billion with a price of sales of 7 with a PE that's going to be closer to the 80s. And yes, it's a high PE, but for a fast growing company, like you know, it deserves a high PE. So with a short float of 30%. So I mean, look, I cannot blame anyone who buys this dip. I just really don't think I know enough about the company. I don't know enough about the financials, the details. I've got to go a lot more deeper into the industry. I listened to the call yesterday. I'm going to be honest. I was not impressed by the call, was not impressed by management. It wasn't, you know, something that got me really excited to believe in their vision. I know that's a small way of judging the company, but it's just one of those things where it's not for me yet, but I understand if you're buying this dip, and I don't think anyone can blame you for buying it down 22%. I mean, like if I was a HIMS bull, I would easily. This is like Robinhood Q3 2023 to me when it fell from 30 to 23. It's like I bought that dip all day and every day. So yeah, I think it was a good quarter, and I think anyone who's in the stock definitely can't be afraid of this stock. But definitely we are seeing some pain given it ran up way too quick, and that's probably some of the reason for the volatility that we're seeing right now. Very similar to our good friend Palantir. Palantir right here, 91.83. I don't know if this pre-market action is a little bit of a head fake, up 1.2%. I mean, it was down at $87 overnight yesterday, so I kind of wouldn't be surprised if it goes back there. There really is no reason for it to be pumping right now outside of, people just want to buy the dip, which is fine. In terms of a fundamental reason, there's no headline that's positive. In fact, most of the headlines are pretty negative. We had some more insider selling yesterday, so I don't think there's anything like big out there from a headline perspective that should be taking Palantir up. It could just be that, and it's one of the only names that's green in the pre-market along with Nvidia. It could just be that people are tired of the sell-off and they're ready to buy and they're ready to get more AI exposure. 930, we'll kind of see if that plays out. Also, it was down 10% yesterday, so expecting a little bounce is not crazy. But similar to HIMS, they both ran up really quick. Both came down just as quick. Now kind of normalizing, consolidating at these levels, which I don't think would be the worst thing in the world for Palantir. Bank of America says we do not expect Fed to cut rates again this year or into next year. Yes, Bank of America has been pretty bearish about rate cuts. They also think that inflation is going back to 4.6%. Now, the 10-year is actually falling, which is very interesting. I don't know if it's the most bullish fall of the 10-year because it seems more so like market participants or at least bondholders are expecting some level of volatility, recession, rolling recession, whatever you want to call it, and they're locking in their yield before rates come down in a negative fashion, meaning like the Fed will cut rates if we're having something breaking in the economy, and then the 10-year will come down, but that's not a good reason for the 10-year to come down. So the 10-year could be coming down for a bad reason versus the 10-year coming down for a good reason, which is that inflation's coming down, therefore the 10-year is coming down. We have no evidence so far that inflation's coming down. I have my assumptions that inflation is majority shelter and shelter is lagging, and that's why inflation will eventually come down. But CPI, PCE, PPI, all of it's hot. It's a lot hotter than expected. And that is why Bank of America also thinks that we are not going to get a rate cut anytime soon, or we're not going to get inflation coming down to the levels that we need to get it to come down. The dollar is down. Let me check the dollar real quick. This one actually, oh yeah, there you go. Got the dollar at 106.3. This thing coming to 102 would not be the worst thing in the world for some of the international stocks. Definitely wouldn't be the worst thing for our trade deficits. It would probably allow us to have more trade. We know Scott Bessent is big on this 10-year coming down. And quite frankly, that should lead us into our next topic right here. I think there's a hell of an argument for the people thinking that TLT is actually what we need to be focusing on more than the S&P 500. So here's a piece from Bloomberg yesterday. Let me just read this and kind of make the argument here. Musk got the message loud and clear. The bond market was doubting him, demanding more evidence that cuts were adding up fast enough to actually rein in the bloated budget deficit and curb the ever-growing national debt. This, Musk insisted, was a mistake they'd come to regret. The bond markets do not currently reflect the savings that I'm confident we can achieve, he said in a freewheeling long-hour discussion he led on his social media platform X. If you're shorting bonds, I think you're on the wrong side of the bet. Trump is famously obsessed with the stock market as a real-time referendum on his presidency, but now with Musk and Treasury Secretary Scott Bessent in his ear at the start of his second term, much of the attention has shifted to another benchmark, the 10-year Treasury yield. So in Trump 1.0, the kind of Trump put was on the S&P 500 because Trump wanted to be, he wanted to have a good first term as president of the United States, and he wanted to make sure the stock market was up. And we actually saw the stock market have a decent run in his presidency. I think even in 2017, 2018, it had issues with the trade war because he was so concerned about keeping the stock market elevated. Now you got Elon is saying, hey, what if we cut on the spending side? You got Scott Bessent saying, hey, what if we can just get that 10-year to come down, which will get mortgage rates to come down, which will naturally stimulate the economy without us having to do anything dramatic. And that is where you get the focus in Trump 2.0. If the focus on Trump 2.0 is the 10-year Treasury yield, not just the S&P 500, which doesn't exactly have to be correlated between the 10-year and equities, right? The 10-year going down doesn't mean equities have to go up. It means it could go up, but it doesn't have to. What definitely will go up if the 10-year comes down is TLT. And I know a lot of people have kind of used TLT, not even as a hedge, but as their kind of flight to safety for the past couple of months. Right now, it's up 1.18%. If we really see some dramatic decline in the 10-year, TLT should do well. The question to me, the qualitative question to me is going to be, why does the 10-year come down? And if the 10-year comes down because something is breaking in the economy and bondholders are trying to lock in their yield, well, that's not a good reason for the 10-year to come down. I mean, it's nice. The consequences of the 10-year coming down are good, but the way we get there is not going to be the best. Versus if inflation comes down. The thing is, I think the market's just not convinced that inflation is coming down anytime soon. So if the 10-year does come down, it's not because inflation expectations have suddenly gotten too much better. If we check the inflation expectations across the Fed meeting, yeah, like March, there's a 95% chance that we are not going to cut. That was about 75% a couple of weeks ago. So that one definitely went up. If we go to the May meeting, there is a 72% chance we're not going to cut. If we go to the June meeting, there's a 32% chance we are not going to cut. So June has a 50% chance of cutting, but that's still a coin flip, 50-50. March and May, still assuming we're not going to get that Fed cut, which is fair. I mean, we didn't get a Fed cut until September back in 2024, but we really got to see some progress on the inflation side. And until we do that, I don't know if we're going to get the cut that we need to get. Isn't it people expect inflation, so tech moves to bonds? Yeah, I mean, that is also fair. You can make an argument that if you assume inflation's coming more aggressively, then you would kind of lock in your bond yields before. I think it's more so just people think right now, or at least the attitude in the market is that people think something's going to break. And with all the volatility that we're seeing in the stock market, even if that's wrong, that something's going to break, like there's, you could have your assumption that something's not going to break. But the fact that people have that assumption is leading people to be a bit scared, which is, I mean, fair. We've seen it happen time and time again. The question is that fear warranted right now, or is that fear a function of stock prices going up or down? And I think it's more so a function of stock prices going up or down. I mean, like the bear market is this. Look, I'm already calling it the bear market. The volatility of this market is bringing out the worst of people. I'm saying that, oh my God, I missed it. I should have sold here. I should have sold there. Like you got people thinking that they're hedge fund managers that can perfectly have puts on their positions to time this stuff. In reality, most of the retail investors, including myself, are just long-term investors. And we might do some short-term trades here and there, but we are not hedging every single position, making sure that, the reason hedge funds don't usually massively outperform is because they're hedged. So when something goes up, they have to account for their short position that goes to zero, that creates a loss for them because of the fact that they hedge their long position. That's usually not what retail does. And you got a lot of people on FinTwit coming out thinking that they're professional hedge fund managers and they have all these puts that were ready for Palantir to drop or Hood to. It's like, no, dude. Like, and if you do, then I imagine your win rate is significantly lower than just being a long-term investor. So I think there's a lot of toxicity that's been created right now around people being very scared of the fragility of the market, which is fair. It's normal. I mean, dude, my mom and dad yesterday, it was night and day. My dad was like, stock market's a scam. Like legit, you know, he's down 20,000 from his all-time highs. He's like, legit, the stock market's a scam. Like this is stupid. And then my mom's like, dude, I need more money to buy the dip. It was like night and day, bro. It's like some things I get from my dad, some things I get from my mom. My optimism definitely comes from my mom. And then I guess the level of healthy skepticism I had comes from my dad. But you've got two different perspectives here. Some people are like just ready to buy the dip, and other people are just like, this is so stupid. Like, why are things going up and down? And I have to tell my dad, like, when you were at all-time highs on the portfolio a week ago, it wasn't real. You didn't sell, right? Like it was just a number that was, and now you stare at the number every day and it's on your front screen of your iPhone, so you can see it all the time, but it's not real, right? And it's one of those things that is the sooner you kind of reconcile that idea that this is not real, this is my perceptual net worth based on asset prices at the moment, and it can change at any moment. It's a much more healthier mindset, because then you don't feel like an idiot for not selling at certain levels when in reality you were never going to sell in the first place. So why do you feel like an idiot when the stock goes down for not selling at those levels? Because it's just toxic. And so I think from that perspective, it's much more healthier to just like sit back and realize like markets will go up and down, and over the long term, they tend to go up, especially if you're invested in the right companies. But I think there's a lot of fear that's being brought out of people. And as a result, hedge fund managers are also people, money managers are also people, and they are feeling the same type of fear. And I think that fear is being then reflected into their sell side reports around the macro, inflation, et cetera. Whereas if markets started to go back up and this dip gets bought, a lot of those analysts start changing their tone. And I think that might be something that we see over the coming months if this dip ends up getting bought. Here's Julian Emmanuel. He's one of the better analysts that is at Evercore, and his take on what we have currently in the market. And then we will keep going from there.
With the PMIs lower than expected, the inflation and the inflation expectation news has been higher than expected. And you put that all together, and that's the kind of thing in a market that in general is at the upper end of its valuation range, is going to cause a setback. And so for us, ultimately, we think that the story of 2025 will be written in terms of good earnings, right? But at these valuations, when you get adverse news, you're going to get the volatility that ultimately we think is a buying opportunity.
You do. So how long do you think that we're going to see this volatility before things?
Now, notice what he says right here. I think it's very important for people to understand, because the bears are going to come out and they're going to get super aggressive on how, oh, retail is stupid. They always get burned, yada, yada. The reason Julian Emmanuel, which correctly called the bull market for the past 18 months, is saying this volatility is a buying opportunity is because of two words: earnings growth. Now, if earnings growth goes away, and we'll talk about Robinhood in a second, then yeah, I agree. It's not a buying opportunity, because what are you buying? You're not buying any growth. But if Rocket Lab goes from 30 to 21 and they put up amazing earnings growth, then whatever justification you come to in terms of the valuation, you're buying that future earnings growth. If that earnings growth is gone, I agree, stocks are a bad buy. But the evidence that we've seen in Q4, and hopefully that continues in Q1, is that earnings growth is not going away, and it's definitely not slowing down as aggressively as people thought going into 2025, which is why you buy the dip. And so I think for the bears, their argument is a little bit more emotional versus actually analyzing the earnings growth that we're seeing. Obviously, Nvidia is going to give us a lot more evidence tomorrow. But if you still feel your best names are growing aggressively and they're growing in line with their valuation, that is why you buy the volatile dip, because the volatility gives you an opportunity to get those assets at simply better prices.
Things settle out and then again end up moving higher.
Well, if you tell me what we're doing with Canada and Mexico, and I'll tell you how long the volatility is going to last. No, I think if you think about it, right, the month of March has a lot of obstacles to overcome, okay? You're going to have Canada and Mexico. You're going to have the government potentially shutting down or not on March the 14th. And clearly, based on the dialogue that you heard today with Trump and Macron, you're likely going to have something more in terms of Russia and Ukraine that we'll just see how it gets interpreted. But again, going back to this idea that the economic news has gotten unexpectedly soft, the market, in our mind, is vulnerable. We'd call it down to 5,700, which essentially is where it was on Election Day.
Is that about 10%?
A little less.
Yeah, okay.
So,
and just one other point here is that actually, when you think about it, that might get some people a little bit unnerved. But actually, when you look at the average non-recession year, the average drawdown in a non-recession year is 13%. So you can make the case that this is going to be healthy as long as the economy stays steady, which we think it does. and earnings come in the way we think it will.
NASDAQ is now.
So I think that is also a really good point as well. This is another reason that, I don't know, maybe I'm just getting a little bit more mature in the markets. And that's another reason I'm not just like freaking out that much. And I've said this stat many times. I mean, if you guys have been watching the show for the past couple months now, you've heard me say this stat. On average, in a non-recessionary year, the stock market falls minimum 10% at least once during that time. I don't know if that's going to happen now, but we saw that happen in 2024 with August 5th. We had a couple other like 5 to 6% drawdowns, but August 5th, even though it lasted very, for like a couple hours, it was very short. We did get that 10% drop. It happens. And so like, it's okay for that to happen. And that means certain equity prices that are going crazy, like, Palantir, HIMS, et cetera, they're going to get a beta that's even higher than 10%, maybe 20, 30%, which is what we've been seeing in those equities, if the broader market falls 10%. Now, the S&P is barely down 2%. I mean, the S&P really has not taken a beating. S&P 500 right here, basically flat in the pre-markets. And so we haven't gotten an official 10% correction, which is actually phenomenal to see, like the S&P is holding up this well. And I'm curious when the S&P breaks, because it hasn't yet. Like Palantir's broken down. You had Hood that has been broken down. We'll talk about Hood in a second. HIMS is broken down. But these were high-flying, Rocket Lab's broken down. But these were high-flying growth stocks that went nuclear, and like gravity came in, and it just took them back to reality. That's all that happened. The broader market, when it comes to how you measure it, the S&P, the Qs, the Dow Jones, is still up year to date or flat year to date and has not really had a correction. Which means if we're in an extreme fear at this point on the fear and greed index, we're in extreme fear. And we have individual equities that have been decimated pretty badly, but the indices are basically at all-time highs. That there's two assumptions you get from that. Number one, I think the indices could have some more pain coming because the indices really haven't felt any pain, which means individual equities could also have more pain coming. And that's one argument to not buy the dip yet and kind of be a little bit more patient. Number two, it means that individual stocks in this 2025 stock picker market are getting hit badly, but the broader market is sustained. And the evidence of that is that people are not selling off the indices because they believe in the broader market, even if they don't believe in HIMS, Palantir, Rocket Lab, SMCI, or Robinhood currently right now. And I think both of those assumptions are fair. But until the S&P really gets a dramatic move, I don't know if we can say we're entering into a little bit of a full-on correction, because there have been corrections in individual names, but not in the broader markets. And I think that's the kind of an interesting thing to look at when it comes to how we're analyzing what's going on across the broader market right now. Speaking of the broader market, let's talk about Hood. Okay, so let's get a little bit of an analysis right here on Hood. So I've been getting a lot of questions. Is Hood a buy the dip yet? What do you guys think about Hood? And where is the growth prospects for Hood looking at? So I do want to spend a couple minutes on this because I have some thoughts here. I think I understand Robinhood better than most people on the planet. And I say that with a level of confidence because I studied it deeply last year. It's the reason I made a lot of money off the ticker. It's the reason I think I will make a lot of money on the ticker over the next decade. I just think I understand this company very well. I've seen a lot of people be very excited to get into Hood because this is their opportunity because they feel like they missed the run, which is fair. The problem is, and this comes from like deeply understanding the company, it might be a little too early. So Robinhood right here is trading at a 32 PE and grew over 100% year over year. So Roy right here says, if you're waiting for a sale, this is it. And I don't disagree. I don't think that this is a bad time to get into Hood or at least start a DCA. One of the reasons I think I understand Hood better than a lot of other people is because I understand Hood's historical trajectory and what has happened with the company during these types of moments. Now, what do I mean? If you've actually researched their past, in 2021 Q3, Robinhood put up one of the best quarters ever when it came to crypto. They made over $235 million alone in that quarter just off crypto. This quarter they did $350 million, which is just insane. But that quarter they did $230 million. A lot of the argument I'm hearing from people on buying the Hood dip is, well, Robinhood benefits off the volatility. So even if people are selling stocks in crypto, they're the toll booth, they're collecting all that money, so therefore they're still going to do well. That is correct in the short term. The problem is the long-term effect of that is still net bearish for Hood. And this is where I think people are getting the Hood thesis wrong. And I can be pretty damn objective here because I'm very bullish about it, but I also know the company is simply not that diversified when it comes to their business model. And this is why I think I've been saying for the past 2 years, Hood is a proxy on the bull market. If we're not in a bull market, at least in the short term, Hood is not that same proxy. After that Q3 2021 earnings, when Hood had $230 million off crypto, it was their highest level of revenue they ever generated off crypto. The stock went up for like a week and then it proceeded to tank. And the reason it proceeded to tank is because the market realized, oh, that's when I think Bitcoin was like topping at 60,000 or whatever in 2021. The market realized, oh, Bitcoin just topped. A lot of people made a lot of money off of it. Now, once Bitcoin goes bearish and people stop trading crypto and alt season is not that exciting, meme coins are not that exciting, Solana, Ethereum, they're seen as scams and like no one cares about Bitcoin anymore. People are not going to be trading crypto as much. If people are not trading crypto as much, those trading volumes, which is the far majority of Robinhood's trading revenues in Q4, those go away or those substantially decrease. I mean, Q3 they did 15 billion of trading volumes. Q4 they did 70 billion. I don't think they're going to do 70 billion again. I don't think they're going to do as little as 15 billion. But if that number comes down dramatically, so does their earnings growth. If you have less people trading, you have less users, you have less net deposits, you have less assets under custody. I mean, everything on Robinhood pretty much goes to shit, quite frankly, if you don't have people that are engaged and energized in the markets. You have less margin interest. You have less people taking out loans from Robinhood to be able to use to trade. Like, everything goes down. And so from that perspective, I have not bought the Hood dip yet because I am not convinced that Bitcoin is going to be able to sustain these levels. And so far, Bitcoin going below 90K has kind of been proving that thesis correct. And I'm not fully convinced that the S&P is bottoming at 597 if the rest of the market is taking a little bit of a hit. So I'm just being patient here. I have enough Robinhood where I kind of don't care if it makes a round trip to 65 and I didn't buy the dip. But obviously, I would love to buy the dip. I'm just wondering, how bad does the dip get? And it's not really wanting to be greedy here. Maybe it's wanting to be a little bit greedy because I have a lot, so I don't need to be super energetic to begin DCAing. But rather, again, those trading volumes go down immediately. Like, it happens overnight if people stop trading. That's just the nature of this business. Unfortunately, Robinhood is not as diversified as a financial services company, and it's just something we have to be honest about. They need the bull market to continue. So I do believe in their innovation. I believe in their growth. I believe in a lot of their products, but I also think that there will be a moment where if people stop trading, Robinhood doesn't do as well, and that means this asset gets even more attractively priced. Now, people are saying, oh, well, it's trading at a 32 PE, growing 100% year over year, therefore it's already incredibly cheap. I agree. The problem is, will they continue growing at 100% year over year? Will they even keep growing at 50% year? Because if they're not, that PE does not look that attractive either. So to me, I mean, if you don't have a massive Hood position, nibbling here is not a bad thing. But if you've been in this thing for a while and you want a really attractive price, like, I mean, even if I'm management, right, and I'm thinking back of buying back my stock, if I was Jason Warnick, the CFO, I would wait to see what happens with Bitcoin over the next month. Because if Bitcoin tanks back down to 80K, 75K, yeah, Robinhood's not going to be at 49. It'll probably be in the low 40s, if not in the high 30s. And if that's the case, that price gets even more attractive when it comes to buybacks. So those are my thoughts on Hood. I would not be surprised to see this reverse and go back to 50, 55. I would also not be surprised to see this go down to 45 and below. I think I get a lot more excited at 45 or below, but we're going to have to see kind of how this plays out over the coming months and see what happens with Hood. Let's get Dan Ives on, see his thoughts on what's going on with the broader tech market, what's going on with China and Trump, and then we'll get this market open in about 10 minutes.
The ADRs out of China listed in the United States, how investable are they?
I think Lisa hit it. I think Baba oversold here. I mean, look, there's going to be some fear factor, but when it comes to cloud, when it comes to who's going to be the winner in AI in China, I think names like Alibaba, those are names that you own here. So I think Bar's going to be a little worse than the bite here. I think that's actually the best reaction that we're seeing in China in terms of some of these names.
They're two different things, though, Dan. The idea of buying in China if you are in mainland China versus buying the ADRs in the U.S. at a time where there is increasing focus on whether some of these companies should be raising money in the United States. Do you think that there will be an increasing divide between the depository receipts and what we see in mainland China or Hong Kong?
Well, I think there will be, just because the worry here in terms of, what could come out of Trump and the Beltway. And then I think the other focus is, even though we're hearing jitters and obviously going to Nvidia tomorrow, I think more and more investors would rather own big tech. Obviously, there's regulatory risk, but that continues to be, I think, at the top of the mountain when it comes to AI revolution.
Dan, Evercore ISI put out a note saying the sell-off, what's going on in China, is more about sell first and ask questions later. Given this directive from the president is just that, a directive. It's a place of travel where they want to go. How much of this do you read as leverage for some sort of deal potentially Trump might want to do with Beijing?
Look, I was just in Hong Kong, over the last week. I do think that this is all a game of high stakes poker to ultimately where you get to some sort of deal. Look, I think given the movements, I get it, but I do think that you're going to get to maybe a lot better outcome here between U.S. and China. That's the thinking. I think especially in Hong Kong and a lot of investors there, rather than maybe some of the onerous or draconian scenarios that you would have thought, going back to when Trump got elected.
How concerned are you, though, that there are conversations already underway between Trump administration officials when it comes to stricter export controls, similar to what we saw in the Biden administration, but actually even maybe a little bit sharper?
Which I think is also, Jensen's going to have to answer this question, because right now there's this controversy that Nvidia has been selling to Singapore, and they know that Singapore is shipping to China, but they've been doing it regardless. So I think the analysts are definitely going to ask about that on tomorrow's earnings and try to figure out how much of a headwind it's going to be if Trump kind of shuts that down. Still a small part of the revenues, but at this point, Nvidia can't afford to miss on these revenues.
It's all going to be this fine line. And just even think about things like TikTok, right? I mean, that's another chip on the table, just like China has chips as well with Tesla and FSD. Look, this is all going to be in negotiation. But I do believe that there's going to be this balancing act. I don't think this is going to, what I view as like draconianly impact chips, the supply chain, despite maybe some of the fears out there. And I think that's also why he talks to Jensen, talks to Cook, of course, Musk, with the front row seat, in terms of this very tricky balancing act between acting tough, but not ruining this, what continues to be, I think, the biggest tech transformation in the last 40 years.
Speaking of Nvidia even more, so this is what Morgan Stanley put out about them. Again, tomorrow is going to be a really important day for Nvidia. They have an outweighting price target of 152. They believe that the guide will be for 2.2 to 2.5 billion, which would put us at around 42 billion. We note that this has been the pattern the past 2 quarters. There are concerns around various Blackwell ramp issues, but by the time of the earnings report, the stock and expectations have risen. That said, we think guiding for 42 billion would be fine, assuming it is accompanied by the return of the CEO enthusiasm that we saw late last year versus CES, where it felt like expectations were in management mode. Nvidia still remains our top pick. We aren't seeing the quarter as a major positive catalyst, but we remain convinced that once we get past export controls, which is what Dan Ives was just talking about, there will be positive momentum going into the second half of the year. I agree. I mean, look, the street wants 38 billion and 85 cents. I think Nvidia's got to put up 40 billion and 90 cents of EPS for this to get exciting. I just dude, I have no clue. I've read, I think, 3 bearish sell side reports, and then I've read 15 bullish ones. The majority of the street is obviously more bullish than bearish on Nvidia. Nvidia right here below 130 in the pre-markets. And although the bulls on, from Evercore and JP Morgan and Goldman Sachs are saying this is our top pick and we believe in it, they kind of don't know either if Nvidia is not going to guide the way that the street needs them to guide. Again, Nvidia is cheap if they guide the way everyone thinks they're going to guide, which is closing in on 4 to 450 of EPS by the end of 2025. If they don't guide for that, I mean, we just don't know how this plays out. And I think the one thing that could really hurt them is gross margins going below 70% or below 75%, and then top line revenue growth just not being that strong. If you listen to someone like Dan Ives, he believes that demand outstrips supply 15-1. So even if there are any concerns, they will be supply bottlenecks, not demand bottlenecks, which is always better than demand bottlenecks versus supply bottlenecks. And the question is just going to be, can they live up to the expectations? I don't know, dude. This is going to be one of those quarters where either it's going to create a sophisticated number of bag holders on Nvidia, and this thing is just going to be nasty, or it's going to just calm everyone down and let them remember that there is a tech bull market, and that tech bull market starts with Nvidia first and foremost. Palantir is basically just about to go red. So that 1.2% pump in the pre-market now going away. Kind of had a feeling that was not going to last. 5 minutes before we get into the market open. The fact that it's even holding 90, though, I mean, 85 to 90, I know 84 is where the gap fill exists, and a lot of people are calling on 84. 84 would round trip us all the way back to where we were on Q3 earnings. And so obviously if we get back to 84, Q4 earnings would have, that pump kind of basically didn't happen as we get back to those same levels. I was talking to a couple of people last night that are in the Palantir community, and I mean, even they were saying, dude, like I talked to a guy who has like 17,000 shares of Palantir, and he was like, as bullish as I am about the company, his exact message, let me read it right here, is that Palantir is trading at a price of sales of 80, even after the pullback. Salesforce is trading at a price of sales of 8. The price of sales was at 100 last week. People need to get a reality check. I mean, I like Palantir a lot more than Salesforce, but not sure if it was worth 12 times more. Not currently, but maybe in the future. And it was not Steve. it was another Palantir bull. That sounds like Steve, but it's not Steve. But yeah, I agree, dude. I agree. It got aggressive. Valuation got aggressive. And unfortunately, when the valuation gets aggressive, the downside also is as aggressive. And I don't think that means you have to be bear. I mean, the guy has 17,000 shares. Like, he has a lot of Palantir, right? So this is not a guy saying this as a bear. He's more so saying it as like, dude, I'm bullish, but like it got up there and now it's taking a break, and that's normal. It's not crazy to see this thing kind of get back to normal. Wiggly says it's growing 6 times faster, though. That's correct. And again, that's where people will point to the argument around growth, which I'm sympathetic towards. It's just not, that growth is baked in times like 100, given the multiples that we're trading at. And I think that's just one of the things that the broader market is starting to reconcile with as maybe not worth as much of a premium in this current climate. And that's okay. I think that's not a bad thing for it to be down. A couple super chats. Let me read these real quick, and then we got the market open. Fool's Gold, thank you for the $99.99 super chat. Admit God brought you to all of us for a reason. Not gay, but love you, dude. I do not think God brought me to you guys, but if he did, then I'm very grateful to God bringing me to you guys. I think I don't know if the YouTube algorithm is a form, a metaphorical form of the universe that brought me to you guys, then that's awesome. But thank you for being here, Fool's Gold. Thank you for the $100 super chat. And thank you for being part of the show every single day and being here and listening. David, thank you for the $70 super chat. Good morning, Amit. May I ask, what are your top 5 holdings and what do you think the revenues of Palantir will be in 2030? So top 4 holdings are Nvidia, Palantir, Robinhood, and Grab. I don't know the 5th one. The other positions are much smaller. In terms of revenues for Palantir, I think it's subjective, right? I've seen models where people are expecting 11.5 billion in revenue by 2030 for Palantir. I've seen models where people are expecting 30 billion in revenue by 2030 for Palantir. I am less on the side of it being 30 billion. I'm more so on the side of being closer to 10, 11 billion. And that would put the growth rate at, I don't even remember, around 22%, 25% compounded over the next 5 years. So it really depends on the growth rate that you assume for the company. I think the company will always trade at a pretty aggressive premium because of how much momentum is baked into the narrative. And the fact that I do think, I have publicly said, I think they can get to 40% growth by the end of the year. They guided for 31%. I think they're sandbagging and they'll get closer to at least 35% by the end of the year. But if you assume they can get 30 to 40% growth over the next couple of years, then yeah, that 11 billion number might be much smaller given how much they can compound. But we're just going to have to see if they can pull it off. The one thing people have to remember as well, I've got 45 seconds till the market opens, is that every time they have to beat their comps, the comps get harder. Same thing with Hood, right? So Hood has to not beat 460 million like they beat in Q4. Now they have to beat 640 million, and growing from that base just gets harder and harder and harder, which is why these companies have to remain elite and innovate and do what they need to do. But it does get tougher along the road. We just hope the AI catalyst and the AI trade for Palantir continues to play into effect. For Robinhood, that wealth transfer thesis continues to play into effect, and that hopefully guides their growth over the coming years. All right, here we go. We got 10 seconds until the market opens. Let's have all eyes on Palantir and see if we can actually hold that $90 range. Thank you, everybody, for being here. 9:30 a.m. The stock market is once again open. All right, wake your ass up. Here we go. Palantir trying to hold on to the 90s. $90.43. That's down about 0.5%. 89.90. We were at 87 last night. We'll see if we can revisit those levels, but we are down on the day. 89.99. Just trying to hold on to 90 again. 87.06 was the bottom last night. It looks like we're going to give up 90, but so far we're holding it decently. Not too bad, but also not holding really above 90 as well. HIMS is down 22%. We hit 38.80 on HIMS. That one is still down 22%, now at $40. Rocket Lab down another 2.4%, 21.93. Bitcoin, 88,756. Robinhood down another 5%. Robinhood now down 27% from the top at 65, back down to 47, down 5.18%. right here at 47.22. CleanSpark's down 4%. Google below 180. That's down 1%. Spotify's down 2%. Amazon getting destroyed. I mean, Amazon was at almost 240. Now it's at 211. So Amazon's definitely getting hit. SMCI is, wow, down 5%. No 10Ks out. No 10K is out yet. Until that 10K comes out, I don't think we're going to see any green on SMCI, but hopefully the 10K by the end of the day will be out. I think 5:30 p.m. Eastern is their deadline. Alibaba up 3%. Nubank is up 0.5%. Apple being the flight to safety, folks. People are going to Apple, trying to get back to 250, up another 1% today after being up 1.2% yesterday. Microsoft down at $475 or $400.75. SoFi, 1411 down 2%. Oklo down another 2%. AMD down another 0.5%. MicroStrategy, wow, down 5%. Makes sense with Bitcoin going down 267. The premium to net asset value is 1.3. It used to be 3.5. My question for MicroStrategy is what makes that premium go higher? I would imagine Bitcoin has to go up dramatically. And so it's kind of at the mercy of Bitcoin. Saylor did buy another 20,000 Bitcoin at 97,000 yesterday. Bitcoin right here at 88,000. So his average is 66,000, still, trading above his average, but Bitcoin right here at 88.67. They now hold 499,000 Bitcoin. Nvidia is down 1%, 128.76. So Nvidia just below that 130 level. Palantir going slightly green at 90.70, kind of holding on to it. HIMS at 40.49. We do have some people buying the dip right there as it's retracing above 40. Rocket Lab 21.90, kind of holding up. Robinhood 47.97. Cisco's green today. Lockheed Martin is green today. Vimeo is green today. Wayfair is green today. United is down. Unity is down. TQQQ is down. Reddit is continuing to go down 1.24%. Verizon's green. McDonald's green. And Carvana is green. So interestingly enough, some of your core assets that are more safer are green. Disney as well goes green. Let's go look at the spec portfolio and see what's going on there. Red, D-Wave is down, IONQ is down, Rigetti's down, Qubit's down, Color's down, Oklo's down, GameStop and AMC are slightly green. MicroStrategy is now down 5.2%. Big Bear, it was at 570 yesterday. Now it's at 160. That's up 603. SoundHound is down 3.4%. Nvidia divested from their entire stake in the company. And then Archer continues to fall down 2.6%. This was at $11 last week. Now it's at $8.30. All the crypto names getting wrecked. Coinbase, wow, $20 away from going below 200. Again, when you're that tied to Bitcoin, it can get aggressive. Bitcoin right here, 88.9. CleanSpark, 860. Marathon, just been a disaster, 1343. Riot, 974. MicroStrategy, 269. Robinhood, 4840. Robinhood trying to get back to 49, but bouncing a little bit from 4670. And then Bitfarms right here down at 119. Currently right now. The S&P 500 is green, which is just incredible. It's hard to say this is like a bear market, dude, when the S&P is green. And I there are certain pockets of the S&P that are keeping it green, but it's hard. Certain stocks you can be bearish on 100%. Like their charts are ugly and, they're in falling wedges, all that stuff. But I don't think this market necessarily is bearish with the S&P holding up like this. I mean, it's quite phenomenal to see the S&P going green, meaning people are buying other things other than high risk growth risk on assets, which is fair. And that's what's keeping the rotation trade alive while the S&P continues to hold up. The Qs are down about 0.5%. And so that's tech that's weighing it down. IWM, small caps, somehow green. You would think in a recession, or if there was a recessionary time, small caps would get destroyed. Small caps holding up. I mean, they're down 10% over the past month, but they are not getting destroyed as we see green or as we see red across a lot of these different high flyers right now. Yeah, nowhere near a bear market. I would agree. I mean, you would need to see really bad earnings growth, and you would need to see the indices get hit, and the indices are holding up. I mean, again, what is down? SMCI, that's 10K fears. Palantir, that's down because the valuation is just really high. HIMS, this thing ran up to $70. It's down because it's taking a breather. Rocket Lab, this thing also ran from $4 last year to 30 at one point. It's taken a breather. Robinhood, it's still up 20% year to date after falling 35%. Like it was up 55% year to date. It's taken a breather. These names I don't think are indicative of the broader market. I think what's indicative of the broader market are the indices, and the indices are holding up. Now, Mag 7, I also think another reason to be kind of bullish on this market right now is that Mag 7 is flat for the year. And I actually really like that, because that means that when new money tries to get exposure, they're going to want to get exposure to the best companies in the world. The best companies in the world haven't moved all year. I know it's only been 6 weeks into the year, but I mean, they're either down or flat, which to me is, if you got new money coming in, you want these prices, or you want these stocks at just better prices. Amazon year to date. What's Amazon's year to date? Let me check. Amazon year to date. Yeah, Amazon's down about 4% year to date, which is, again, not crazy, but still, it was at an all-time high, and a lot of these stocks just retracing from those all-time highs as well. Google at 177 is ludicrous. I agree with you. I don't think Google should be at 177. I think that's kind of stupid. Google now retracing back to 180 right here. But if I'm a new market participant with a lot of money coming in, I've been on the sidelines, I look at Google trading at 16 times earnings, unless I think that like search is going away or AI is a sham. But by the way, Google did win a $2.5 billion contract yesterday from Salesforce for their cloud computing. So they beat AWS and Azure for that contract, which is really good for them. Salesforce right here down about 0.39%. I would get excited about Google versus get scared. Tesla is getting hit. So Tesla right here at 320. At this point, I think they want Tesla below 300. And I think if they want Tesla below 300, they might as well just give it to us below 300. But right now, it definitely seems like momentum is not on the side of Tesla. FSD China is officially out. I saw a couple of videos yesterday of FSD being utilized in China, and it's quite remarkable. I mean, the people are showing some really good strength with FSD in China, but that is not enough of a catalyst to get people too excited. So here's a quick little video on FSD China. As you can see, it's actually navigating the roads. It's navigating a lot more obstacles that would exist than in typical United States roads, but it's not enough to really, move the stock right now, which is fair. I mean, they're still not making a ton of revenue from it, but the fact that the stock keeps going down, even though you have these bullish catalysts, and again, I believe that Optimus eventually will be the biggest bullish catalyst in the next year and a half. That to me presents itself as an opportunity. The question simply becomes, how low do they let this go? 319 on Tesla right now, down about 3.06%. Nvidia 129.69, that's down 0.5%. SMCI down 7.5%. That 10K could not come out soon enough, but it is down. Shopify right here down 1.5%. Trade Desk at 75. Grinder is somehow green at $19. Which has been, I guess, the best play all year so far. Marathon 1333, that's down 4%. MicroStrategy down 6%. AMD 107. SoFi 1417. SoFi holding on to that $14 range. I think SoFi at 1350 gets kind of stupid. Market's holding it up above 14 right now. That's another thing about a lot of these stocks. I think they get really stupid at certain prices. And usually when it gets that stupid, you get buyers to come in. Right? You could say Tesla at 250 is not even stupid. You could say Tesla at 250 is still overvalued. I get it. But SoFi at 1350 or SoFi at 12, to me, just becomes stupid. Like it's just, and I wonder, are they taking this thing back to $9? Right? Like, are we getting to that type of market? Because SoFi is still going to grow 25% this year, right? And they're profitable. Are we giving them zero premium at all? Or is this one of those things that's going to kind of consolidate, maybe down 10, 20% from here, but it's not going back to the lows that it was at last year? And I think eventually we're going to find out how the market treats it. Where is Palantir? We are back to below 90. We're like literally hovering at 90, 89.50 to 90.10. But it is staying right below this $90 range. Amit, do you think we reverse after tomorrow or March beginning? It's really hard to say, man. Again, I showed you guys that chart yesterday. Historically, at the end of February on a post-election year, this tends to be the bottom. And I know it sucks living through the bottom, but if this is a bottom, then I would expect a bit of a reversal going into March. The two reasons I think March can be a little tough as well is, number one, people have to pay their taxes, right? So you're going to have people that sell equities in March to be able to pay their taxes in April. So that's one of those things that could create some more sell-side pressure. That's also not great for HOOD because, I mean, their assets under custody will go down, right? If people have to take assets off the platform and pay their taxes. So that's one thing that could be a little bit of a headwind. Number two is it all depends on Nvidia earnings, right? If Nvidia shits the bed, then I don't know how to predict what's going to happen over the next couple of months. My bet is that they don't shit the bed. My bet is that the stock might fall 5 or 10%, but Nvidia, the company, is not going to mess up, which is basically what's happened for the last 3 quarters. Nvidia's delivered a pretty good quarter. One could say a phenomenal quarter, but the stock has just not been able to move. And that's also fair because the stock moved a lot in 2023. So I could see that happening pretty easily. I do think that dip would get bought as long as they have a good guide for 2025. But tomorrow is going to be really important to see how that plays out. Nvidia earnings is tomorrow after the bell, 4:05. 4:05, we're going to get the numbers for Nvidia. Let's see some stuff that's green. So TFC is green today. That's a regional bank, pays a 4.3% dividend. SLG, that's a REIT. That is also green about 1%. That pays a 4.82% dividend. Verizon is green. The market thinks that cell phone service is not going no way. If we look at Disney, that is also green. If we look at Nike, which was up 5% yesterday, that is flat on the day. So not super red, but also not super green. American Express is green. McDonald's is green. Carvana is green. Enovix is down about 4%. Cisco's green. Lockheed Martin is green. Berkshire Hathaway, which actually ironically hit an all-time high yesterday and is still at an all-time high of 1.42%, is green. As we see volatility and growth, people are shifting to, I wouldn't say Berkshire is only value, but it's definitely a better proxy on value than like the NASDAQ. And so Berkshire right here up about 2% on the day. Grab's holding up as well, dude. I mean, Grab to me, I think they put in what looks like a double bottom at 467. If we break below 467, we're probably going to 450. There are some people calling on it to go below 4. I think Grab will be trading at 50% cash. I don't think that happens. I think there's enough earnings growth to keep it sustained. And in general, like you would have to have institutions start to really sell it off. I don't think retail will cause that type of a sell if it goes below 4. Algos could also do it, but I think, we would have to see like a good 10% retracement in the broader market. I think it holds this 450, 475 level. And if it does, then hopefully it consolidates to make the next leg up. But below 4 is kind of hard for me to see happening. Just like SoFi below 13 is hard for me to see happening. But we're going to have to see how bad this market gets. S&P is still green. SMCI down 5%. HIMS down 19%. A little bit of recovery from down 23%. Google below 180. Riot below 10. And then Amazon right here at 211 on the day. SMCI did not release the 10K yet. That has not happened. However, Germany did say that they are getting ready to spend 200 billion euros in defense spending. And then France this morning said they want to spend 2.5% of their GDP on defense spending. So it looks like Germany and France are getting a bit more ready to just say, hey, it's time for us to spend on France. Or sorry, it wasn't France, it was the UK. It looks like they're getting a lot more prone to saying it's time to spend on defense spending, which theoretically, in my opinion, is bullish for Palantir, but it depends on if Palantir can capture that business because Germany doesn't like Palantir. Neither does France, and the UK is the only one that actually kind of like enjoys having Palantir, and even the United Kingdom people aren't really a fan of Palantir's NHS deal. So although I think the budget increases as a percentage of GDP for defense spending is bullish Palantir, it might not be Palantir that ends up getting the money. They're really going to have to figure out how to mend their relationship with those countries to be able to make that happen. But that is another catalyst, hopefully, over the coming months that we'll see. Did you see the shareholder letter from Warren Buffett? Yes, we talked about it yesterday. Again, Buffett is sitting, Palantir right here, just below 89 right here. Buffett is sitting on $335 billion of cash. I think Buffett was kind of BSing in the letter to an extent. I mean, he said, look, I know you guys think we have a lot of cash, but actually we have a ton of money in equities. And we have a ton of money in the companies that are not public. And to me, I just think that's not exactly telling the truth. I mean, the far majority of Berkshire's assets are in 10-year treasury bills. So he didn't really respond to the claim that a lot of Berkshire shareholders are even asking, which is, hey, why is all your money in cash? And he said, look, well, we have a ton of money in our private businesses, our public businesses. Yeah, but that's down about 70 billion from where it was last year. So like, I feel like he should have just been honest and be like, look, I think there's a crash coming. Now, obviously, you don't want to be the boy who cried wolf, and if a crash never comes, he doesn't want to be the guy who is calling for this epic crash, especially at this stage of his life. He probably doesn't want to scare people, so I get it. But if you read between the lines, it's pretty obvious he thinks that there's going to be some pain. And I just don't know why you hold on to $300 billion in cash without it. Or he doesn't see a great opportunity, which, I mean, I guess you can think there's not going to be good pain without having, if you don't think there's great opportunity. But the question then becomes, what creates the great opportunity? And it would be pain, right? It would be some type of macro event that makes, I don't know, let's just say he wants to get into Google, which probably was never going to happen. But if Google goes down to 110, which would be like egregious, maybe Buffett gets interested, right? And then that $300 billion gets deployed. I don't even think Google at $50 would get Buffett interested. But the point is, he needs some pain to happen. And I think he's basically saying that without saying that currently right now. Buffett is as cutthroat as they come, but he can hide perfectly behind his old, gentle grandpa facade. Yo, that's 100% facts. Dude, Buffett is... Dude, the deal Buffett signed with Bank of America to stop them from going bankrupt back in 2008 just shows you how cutthroat he is. Also, people don't know, Buffett is the best put seller of all time. He sold $35 billion of puts on the S&P 500 back in 2009 and collected, I believe it was $5 billion of premiums. So, when you talk about going long America, he went long America because his argument was like, look, I'm never going to get assigned on these puts because like the puts shouldn't print because the S&P hopefully should have bottomed. Like he legit called a bottom with the deals he made with Goldman Sachs, Bank of America, and then his put premiums. And he collected one of the best put premiums ever because the S&P bottomed in 2009 and he never had to get assigned those shares. So he is very cutthroat and ruthless, but he also will be able to allow people to read through the lines as he's not always exact with the way he thinks about the broader market. Buffett is USA Reserve 2.0. Dude, Buffett has 89 billion more in treasuries than the Fed has. That's crazy. That's just like the Fed doesn't have as many treasuries as Buffett owns in his reserves, which is wild. Eli Lilly is up 3.4%. Yep, Eli Lilly. That's getting some love. Novo Nordisk, I imagine, is up right now. Yep, that's up 3.2%. So HIMS is down. Novo and Eli Lilly picking up the slack right there. Bitcoin's still taking a beating. Bitcoin, wow, 87. There you go. So that's well below 88. Now, if we go below 86.8, that will be the official bottom on Bitcoin. And I guess we'll see if we break through that bottom. But it is definitely showing some pain right here. Eric Trump tweeted to buy the dip. Yes, Eric Trump and Michael Saylor are tweeting to buy the dip. I mean, I don't know if Eric Trump is the barometer on if we should be buying the dip or not on Bitcoin. But look, my thing about crypto is like, I like it as an asset class. I think there is a thesis there. I love Robinhood as my exposure to Bitcoin. I know some people don't believe Robinhood's exposure to Bitcoin, but it's done very well for me as a Bitcoin catalyst. But the one thing I hate about crypto is this meme coin stuff. And I don't think people shouldn't have the right to trade meme coins. I just hate the velocity at which people have been coming up with meme coins and just obviously pumping and dumping on people. I mean, Kanye West is getting ready to come out with a meme coin. It's all BS. And it's all short-term stuff that reminds me of NFTs because it's not real. All of it's fake. And all of it's a game of musical chairs of how quick can you get out, which is, I don't think what Saylor intended Bitcoin to be, but given that's how the asset class is permeating across the broader crypto community, that's what we're saying. Oh, did you guys see Sam Bankman-Fried tweeted last night? This was not in my bingo card in terms of what I thought would end up happening, but he tweeted last night. I don't even know how he got a Twitter account from jail. One could believe that this guy's going to get a pardon because the way he's tweeting. I mean, look what he said. I have a lot of sympathy for government employees. I too have not checked my email for the past few hundred days, and I can confirm that being unemployed is a lot less relaxing than it looks. And then he goes on to talk about like why government employees should be responding to Elon's email. And I'm like, what? Like, first of all, where did he get a phone to tweet about this? Second of all, why is he like this? This was so confusing, bro. And it leads me to think that there's a world in which his parents, who are very well connected, if you don't know the Sam Bankman-Fried past, his parents are very well off. They are politically, they know the right people. Who knows, man? There's a world. Bloomberg did report a couple weeks ago, Tesla right here at 316, that Trump was exploring a presidential pardon for Fried. If that happens, dude, I don't know how the crypto community is going to react to that. But that tweet right there, just that my gut feeling was like, oh, he's going to get pardoned soon. And I guess we'll find out. But it is kind of sad. Isn't he in jail? Yes, he's in jail, which is weird. I think he's in a really nice jail, though. I don't think he's in like a horrible jail, if I'm not wrong. Tesla getting destroyed, 316, down 4.4%. Palantir 88, kind of holding on to that 88 level. Bitcoin 87.5. Tesla now 315. I think they want to take it below 200. I think they want to take it below 200. Amit, do you think the Trump coin will bounce back? No. I think the Trump coin was very sad when I saw that come out, but there's people who bought it at 70 to support Trump, and well, I guess their support went a long way. It's not helping their financial situation right now. Yeah, I mean, I don't know what could make the Trump coin go back up. Like Bitcoin would have to totally reverse. I mean, even if that does happen, who's going to buy the Trump coin? Like it's a pump and dump, and it's going to be a pump and dump for a long time. Sorry, Tesla below 300, not below 200. I meant below 300. If it goes below 200, dude, this is like, then we've got a pretty disgusting market. SoFi, are we down below 14? We are just below 14. Palantir now has to return 44% from here to get back to all-time highs. Yeah, and look, I wouldn't expect it to happen anytime soon, especially in this macro. But then again, and I think a lot of you guys agree with me here, I don't think anyone expected it to get to 125. The company themselves didn't expect to even get to 70 until 2029. We are currently at the beginning of 2025. So it's one of those things, if you're a Palantir investor, you just have to be real with. Like, if you believe in the company and you're long, this is just whatever. And you DCA when you want to DCA. If you are so emotional about it falling from 125 to 87, then I mean, you probably should have sold at 125 if you were that scared of it going back down. Genuinely, the reason I'm unfazed, and a lot of Palantir, like the guy I told you I was talking to last night who has 17,000 shares, the reason he doesn't care, A, he's 54 years old. He's been part of the markets for a while. B, like, he knows that at 125, it got a bit ridiculous. And he's fine holding his shares. He thinks it's a lot more natural for it to take its time and get to that level versus happen all at once. Same thing with HIMS. It happened all at once, and now it's going down all at once. But I don't think that's the worst thing in the world. Yeah, I see a lot of you in the chat saying I'm totally unfazed. Dude, I think the majority of you that have been in this name for a while, I mean, this is nothing, dude. We've seen Palantir at $6. We've seen, freaking Zelensky and Karp taking pictures together. The stock has moved 2 cents. I remember, dude, the day that Ukraine picture came out and the stock was up 2 cents. I mean, like the type of pain Palantir had from a narrative perspective and financial perspective, it's nothing compared to this. I mean, we are up more than 12x from the lows at $6. So it's like, this is just not the same type of pain from those levels. Especially, again, if you bought this thing a couple years ago. Rocket Lab in the 20s. All right, it looks like my 10 puts will be assigned at 22 on Rocket Lab. Average will be cost adjusted 21.10. So 2077 right here on Rocket Lab, down 7.6%. I might buy some more shares going to earnings. I'm going to wait till after Nvidia earnings tomorrow, and we'll see what happens. And then Thursday, we have Rocket Lab earnings. Regardless of if the earnings are good or bad, I do think that they're reporting in a pretty crappy time. So, I mean, we could see more volatility. But look, if you got it to Rocket Lab at $4 or $5, which I know a lot of you did, it's still something it's hard to get that upset about, even though it's not $30 anymore. But Rocket Lab also having a pretty dramatic decline right here. Where's Nvidia? Is Nvidia getting hit? Nvidia 126. Oh my gosh, it's $1 away from my average. Oh my gosh. Dude, this is crazy. Am I going to get to buy Nvidia again below 125? This is bad, dude. Oh my gosh. See, I don't see, like, here's the thing, dude. I kind of like this, though. I'd rather have Nvidia at 125 than 140 before earnings. Like, genuinely, I would rather have it be down than up. But could it hold these levels or not? We're going to see. Where's SMCI? Are we getting hit on SMCI? Oh my, down 10%. Goodness gracious. Disgusting. Disgusting, disgusting, disgusting. All right, everyone put their year-to-date in the chat. Put your year-to-date. Let's see where you guys are at. My year-to-date is 7.6%. It recovered a little bit from yesterday. Yesterday was 4%. So now it's 7.6. Put your year-to-date. Also, Chris, I see you in the chat. Chris, I'm going to give you a call. Let's get your take on what's going on in this market. Let's see if you can offer us any thoughts about how you're navigating this. Yeah, I see pretty much everyone is like 4 to 10%. Like 3 days ago, that was 30%, bro. That's for those that aren't negative, at least you can be grateful about that. Some people are break even. Yeah, 4 to 10%. That's what it seems like for most people right here. 35%, 10%, 5%, 2%, 3%, 22%. I mean, if you had puts on the market, you're probably doing very well. SMCI now down 8% on the day. Tesla right here, 314, still taking a nasty beating. Hood, 46.45. Also continue to taking a nasty beating. Again, this is just why I haven't bought the Hood dip, dude. It's just why I haven't bought the Hood dip yet. If we are still going to get nasty market action, the market's going to take Hood down as well. That is what we are going to see. There's the VIX. The VIX right now is up about 2%. It was up 5% yesterday. Up 2% right here. So we're seeing a little bit more green, at least on that side of the VIX. Send me a StreamYard. Okay, let me send Kris a StreamYard. Did I buy at 47? No, I did not buy at 47. I really just, dude, I don't know what it is. It's kind of like sometimes you know a stock so well, you have a little bit of a gut feeling, and like my gut feeling, even though I wanted to buy at 60, I wanted to buy at 57, I wanted to buy at 50. I was just like, I don't know. I see weakness, and the market's just not going to let Hood do well if the market is struggling. Like Hood doesn't thrive when every stock is red. You know, like it's just like you need stocks to be green for Hood. And I think I'm pretty objective and honest about that as a bull. Like it's just not as diversified. It's not juicy SaaS revenue like Palantir that's going to come in regardless of the market being up or down. Like if the market's down, Hood's going to lose some trading volumes, which I think for a generational hold will make it incredibly attractive if it gets even lower than here and even at these prices. But short term, we're not going to get a bounce that easily because next quarter is just potentially going to show lower trading volumes. Salesforce right here at 305, IWM at 216. SMCI still getting just hit right here, 47.78, down 7.3%. Kris, good morning. How are you?
Nothing much, man. What are you up to?
Well, I'm doing a market open, and I think people would rather have the market be closed right now, but here we are.
You know, one thing you said that doesn't really make sense. Go to FinViz and look at the map right now on the market.
Okay. Let me pull this up. Okay, here it is right now.
Okay, so here's the thing. Most of the market is green. All right.
Yeah.
Even the challenge here is that the market rally is just broadening out a little bit, right? So you're seeing people saying, well, you know what? I don't want to be in nothing but just growth. I want to look at other places in the market. So I think what it is the rally is just broadening out a little bit. And so people are saying, you know what? Maybe I don't need to be fully in mega cap. Maybe I can spread it out a little bit. And the reason why the other things are rallying, I mean, you look at healthcare like Eli Lilly and Novo Nordisk are benefiting from the issue with the GLP-1s, right? So they're rallying, but healthcare is doing fine, right? Utilities, basic materials, everything, they're all just chilling right now. Why? Because they're benefiting from that lower 10-year. Look at the 10-year treasury and which direction it's been going on for the last 30 days.
Okay, so basically what you're saying right here is that broader market is green, tech is red, and I think that's kind of consistent with the S&P holding up and barely being down right now as well.
Right. Well, the thing is, remember, tech and speculation right now are a little bit out of favor, and that's why you're seeing kind of like they're all moving they're moving down at the same time. But the thing is, you know, tech at the end of the day is usually performs better than the rest of the market. So whenever you see great companies that go on sale, you should be buying them, you know, like not worrying about things. So like Verizon is there, TFC, SL Green, they're all benefiting from the lower 10-year coming into the picture. Carnival Cruise Lines is up. So tell me, why would someone buy a cruise line versus Google right now? Well, you know what? Maybe you should have both in your portfolio so you're evening out. So don't be concentrated in just speculative stuff. The one thing I've seen with a lot of people with their portfolios is they're heavily concentrated to big tech or to like speculatory parts of the market. Yeah. And so the thing is, if you don't diversify, your portfolio is going to see these corrective days, you know. Overall, though, if you hold long enough, you'll outperform everyone. I can guarantee you that. But if you want consistent outperformance over a long period of time, you got to broaden your horizons outside of just basically sitting in tech. Like here's an example. If you had bought Microsoft last year, you would be down today. Yeah. Compared to buying something like the cruise lines, right? So I think a lot of times people will be like, when I say something like, oh, buy a cruise line, they'll look at me and be like, are you kidding me? Like the most important company on the planet, and you would rather buy a cruise line versus that? Like, no, you have to remember, you have to treat every one of these things like an individual business. If you treat it like a business, it all makes sense, right? So if you have a value, like if you have a company that's undervalued or a business that's undervalued, there's a better chance that you'll outperform in the long run, right?
Are you phased at all by this market correction? Because I mean, from some of the people that I'm talking to that have like kind of been veterans in the game, like as you said, the S&P is green. Broader markets are rotating. Yes, Palantir, Rock Lab, Robinhood, Nvidia, these stocks are down, but this is not one of those things
They're
where
also up a lot too.
Exactly. Yeah.
They're up a lot too. So you just valuations eventually come back to earth. You know, I think a lot of times people, they have this tendency to overdo things to the upside, and then they'll also overdo things to the downside, which is, you know, sell great companies that are generating cash hand over fist, right? So our job is to basically be a little bit contrarian. So when people are selling stuff off that's really good, you should be buying it. You know. Now the thing is, it's almost like you're fighting human nature, right? And that's what Buffett says. Like the stock market is just one of those things where, like, it's in our human nature to not buy things when they're falling. But then, like, when things are going up, it's like, oh man, I'm missing out. Let me buy this thing. You know, so you have to learn over time to like fight that urge to sell companies because they're going down, and fight the urge to buy things just because they're going up. You know.
Okay, in terms of SMCI, you posted this right here. A lot of people are wondering why they're cutting it so close. So what did you post this morning? And I mean, do you think they're going to file the 10K?
So one of the things that I've been trying to understand is what are the possible remedies that these guys have, and then doing like a kind of like SWOT analysis to see like where exactly these guys are going to land. So number one, we've got three main issues with these guys. Of course, there's this uncertainty around, are they going to file this 10K, not file it? Now, here are all the positives that I've seen that give me some credibility. If the CEO comes out and says we're likely to do it, I kind of have to like at least check that box off. Do I believe him? 100% no, but I'd say that if the CEO is willing to publicly come out and say that, then yeah, that's like checkbox number one. Checkbox number two comes in the form of bondholders issuing convertible debt that's linked to the stock price, right? So that's check off number two. Check off number three is a whole bunch of institutional investors buying this company up, because institutional guys, either they have some level of understanding on the procedural parts of this whole kerfuffle, and they're actually doing channel checks and they're doing things that we can't see in the front, but they're doing in the background. So I'm not saying that they're doing insider trading, but they're probably getting data from non-traditional sources to make that determination before they put millions upon millions of dollars. So that institutional buying is also another good sign. So those three things are really indicative of, hey, they're probably going to file. Now, I wouldn't say 100% that they're going to do it today. My biggest fear is that they file for another extension. If they file for another extension and it goes down another 6 months, it's like, what the F? But I don't think that they could survive that kind of liquidity shock if they did that. I mean, there's a possibility that that happens, but
would they get delisted for sure if that happens? Or how do you?
I mean, if they don't file, they're going to get delisted from the NASDAQ. They'll trade in OTC, but problem is, if you're trading in OTC, most funds can't hold you. Yeah. They'll dump you, you know? Yeah. So it's one of those things that this company, they make real products. They're real there. The things that I've been pretty much highlighting this morning was that they do have a lot of positions that they have openings for that are compliance related, like an auditing related. So that leads me to believe that they might have already got a CFO, because usually what tends to happen is, you know, you don't want to hire a CFO. Well, you don't want to hire all these positions and then hire a CFO, and then the CFO kind of wants to bring in those own people. So my thinking is, looking at the job descriptions that SMCI posted, a lot of them are tailored toward SEC compliance and Sarbanes-Oxley compliance, which is exactly what we're dealing with right now. So that leads me to believe two things. Number one, they have someone who's already in like as a CFO, but is not really like public yet. I think he or she is already working in the background doing whatever they're doing, and they're getting positions opened for long-term like what is that thing called, remediation. And BDO probably said, you need this, you need this, you need this. And so they're working on, hold on one second, I gotta sneeze. They're working
Great,
on
great.
it.
Okay, great,
All right,
great.
I've been a little sick too, man. So
Yeah, dude, I must have gave you a cold. Here, let's just react to consumer confidence. This came out, and then I'll get you out of here in like 2 minutes. Here we go.
Yeah.
Pretty smart. The stock market going down. Headline confidence coming in at 98.3. That's February from the conference board. We're expecting a number over 102, sequentially significantly lower than 105.3 in the rearview mirror. And it is the lightest level going back to June of last year. Now, if we look at present situation, a bit of a different story. At 136.5, it's a little better than expected, and it's better than what was in the rearview mirror. But we see a revision. Last month moves from 134 and change to 139.9. So once again, it becomes sequentially lower. If we look at what lies ahead in form of expectations, 82.2 in the rearview mirror, which makes 72.9 the weakest level since June of 24. Now, Richmond Fed, the manufacturing index, I thought we'd be looking at 16 consecutive negative months in a row. Not to be. We got a positive number here. Moves up to 6. That's the best level going back to, wow, April of 22. April of 22. And if we look at Richmond Fed business conditions or the service side, positive one, a bit of a disappointment, but it is the 4th consecutive positive number in a row. We see that the stock market, of course, moving lower on this, interest rates moving lower, and we could say that the slowing economy is the reason for interest rates moving down, but many are saying it's a flight to safety, a safe harbor trade, which is really ironic because if uncertainty is the reason the equity markets are moving lower, why should there be any less uncertainty in the future of treasuries?
All right, Kris, Kris, I'll get you out of here soon because I know you're sick, but your reaction to consumer confidence being that much of a miss right here.
I mean, it makes sense, right? You've got people, you got the Doge team basically firing people right and left. A lot of it seems to be very arbitrary, you know. You got Trump constantly coming on and saying, we're going to tariff Mexico, we're going to tariff Canada. And then the whole European thing's coming around where we're fighting the Europeans. So, you know, that doesn't exactly give a lot of businesses confidence to make investments. And then at the same time, if they're not confident, then they're not exactly in the mood to hire. And so if they're not in the mood to hire, then eventually consumers are going to feel it. So this feeling that the consumer is weakening, I think that that's true. And that typically is a good thing for people who are trying to control inflation, right? If you want inflation to come down, you need people to go out there and not spend as much money.
That's
Okay?
true.
If you're confident that your job is 100% guaranteed, you know, you're going to get a huge bonus at the end of the year, you're going to go out there and you're going to blow some money, right? You're going to cause inflation. So when confidence comes down, you're not going to spend as much money.
So what is your interpretation then of the 10-year coming down? Is that bullish or bearish?
That's bullish, but at the same time, it's bearish. Okay. And I know that sounds a little confusing, but you have to put this in the perspective of which companies benefit from a lower 10-year and which ones are not going to benefit from it, right? So if you're a company who has $20 billion in debt and you've got a bunch of debt that's coming due to refinance next year, you want interest rates to come down, right? And especially if you have a business that's irrelevant of consumer confidence, as an example, cell phone providers, right? So if you're looking at something like, look at American Tower today. American Tower, they lease out cell phone towers around the country. Okay, AMT.
Yeah, they're 7%.
Look at that, and look at the last 30 days.
Yeah, the last month they are 180 to 204.
So this is a giant hedge. When you see companies that have a lot of debt because they take on debt, they finance the construction of these cell phone towers, and then over time they have fixed contracts with with cell phone operators, and they make money regardless of how the consumer is feeling, right? Another one to look at is CCI, right? Crown Castle.
Yeah, they're up 4%.
There you go. Look at that giant rise. And then the last one is SBA.
Yep. So here's the question. Is this rotation into some of these names that are I guess more defensive. Do you think that's short lived? Do you think that's in the moment, or do you think people like my broader question is? Do you think we're experiencing the run up to a 2022 type of event?
I don't think so. I think right now we're just seeing some short-term moves that are pretty much correlated to how the government is cutting back on spending. And so I think one of the stupidest things I saw this morning was Bank of America doesn't think that there's going to be any cuts for this year. Bullshit. The market is telling you, the treasury market is telling you that basically that there are going to be a lot more cuts in the future because inflation is coming down and it's coming down fast. You know?
So why are they saying no cuts then? Like, how are they?
Exactly. That's what I don't get. You know,
unless they think inflation is going to increase irrespective of Doge or consumer confidence.
I always go back to Milton Friedman. Okay. And Trump is following Milton Friedman, and Elon's posted about Milton Friedman. Okay. The economy runs on government spending. So if you cut back on government spending, that's less money that's going to enter the economy. Okay. Whenever the government spends money, whether that be on personnel, goods, or services, that money eventually makes its way into the market. So you have liquidity coming in. So like right now, let's say, and it could be something very, very irrelevant directly, but it eventually filters through. So here's an example. If, let's say, the federal government says, you know what, we're not going to spend $50 billion, right, in one area. That $50 billion is no longer going to go to all the people and businesses and services that the government was going to spend that money on.
Right.
And so now they're going to scale back on hiring. And if they scale back on hiring, people are not going to have as much opportunity for jobs. And if jobs come down, that means that they don't have money to spend. If they don't have money to spend, they don't spend it. And basically the economy slows down. So the whole thing with Doge right now is actually working. This is not a fault. It's actually correctly working as it should. And the goal, which Elon and the team said, is to get the 10-year down. That means that there's going to be some pain in between. And so our goal is, I don't want to feel that pain. I want to be in sectors that are going to rise during this pain period and then sell them before and use the profits to get into the ones that aren't going to be as painful. So right now I would be looking at companies, and I did this last year with something like American Tower, Crown Castle, and SBA. Find companies that are going to benefit from a lower rate environment, okay? Because they have so much debt on their balance sheet, they'll be able to refinance that down, and they're not impacted by consumer weakness. You know, you look at AT&T, T-Mobile, and Verizon. Look at those.
Yeah, no, they're all green on the day. AT&T,
Look at that.
T-Mobile, and Verizon.
So the key is now just rotate. You know, figure out which markets you want to be in and rotate. Don't sit on sectors that are overvalued, that basically are tied to consumer confidence and could end up sinking your portfolio.
But I think the nuance here is that if you have a $30 average on Nvidia and you've been there for a while, right, or like a $10 average on Hood, obviously a DCA makes more sense if you're super long. But if you bought it Hood at the top at like 55, 60, right, it could keep going lower, and that's where I think the rotation, take your loss, rotate into something a little bit easier, might make more sense.
I mean, like I said, it depends on your investing strategies and your tactics on how you want to proceed with it. You know, if you don't want to be active, no, you just hang on to the stuff that you have and just relax. But if you are trying to be a little bit active right now, it's not the best time to be in speculative names. But then again, also, I think we're starting to bottom out a little bit. So if you look at the fear and greed index from CNN, you're seeing that there's a lot more fear in the market, and the VIX has shot up. So look at the VIX. Don't look at the fear and greed index. Fuck the.
We actually just went to extreme fear officially.
Yeah. So you can already see that speculation is out of favor right now. So the companies that are more speculative, they're definitely going to take a hit. So look at the VIX right now. Fear is definitely setting into the market. Okay. So believe it or not, what's the rule that we should all be following on it? Buy when people are scared, right?
Yeah.
So there it is. Buy the high quality companies that are undervalued right now, and basically just have some patience and, you know, let it do its thing.
Okay, so the last two questions for you. A, what do you think is going to happen to Nvidia tomorrow? B, what stocks are you actually buying on this dip, if you're buying anything?
I'm not buying anything, man. I'm actually disappointed in myself because I was gonna add some spreads on CCI. mainly because if you look at CCI, it's a perfect setup. It's a low beta stock with really good yields. And the thing is, because it was in this flat channel for a while, the options were actually pretty cheap. So it was actually down to $84. And I was like, gosh, I should just buy some spreads on this thing. And I didn't get a chance to, but yeah.
So you're not buying the Google dip or the cruise lines dip or anything like that?
I have enough Google already. My cruise lines are starting to recover because they have, like, the two that I have right now, I have Norwegian and Carnival, right? Both of them have a ton of debt on the balance sheet. They are impacted by weakening consumers, but my thesis is that the reduction in interest charges in the future will outweigh the slowdown in the consumer spend.
Right.
Plus, if you look at the demographics of people that go on cruises, they're typically people that are closer to retirement, have a lot more money. They're more on the affluent side, especially on some of the more premium cruise lines. And the amount of demand that's out there is actually far outpaces the supply. So I think a lot of the cruise lines are going to benefit from that. So they're definitely like slow movers. Okay. If you're trying to think that these things are going to go to $100 tomorrow, not going to happen. Right. So
the reason you're not buying as well is because you're just loaded up so much on these, which I understand that. Like,
yeah,
you're loaded up a ton.
Bro, if you saw my position in Nubank, you'd shoot a brick, man. Well, no, you do know how many positions I have in.
It's a lot.
Yeah.
You got to do
how's Nubank doing today? Let me see.
It's up 1%. Yeah.
Okay. So see, this is one that I'd say probably should recover nicely over the next probably like 90 days, mainly because as the 10-year treasury goes down, the Dixie usually follows that. So go to the Dixie and check that out real quick.
Yeah, 106.3. It's down.
So the Dixie's retreating, right? So dollar is weakening. Correct?
Yeah. Yeah.
So this is beneficial for a company like Nubank, who does their what is that called? Does their reporting in US dollars. So one of the things that we saw was the Brazilian real weaken against the US dollar, and Nubank got hit from that. And then the earnings came out. The reported in US dollars, so it looked really like trash. Now, on the other hand, Brazilian real is rallying against the US dollar, which means that it's almost like a tailwind for us. So as the 10-year goes down, the dollar weakens, and the currencies that have a higher interest rates compared to us, the currency should rally. And right now, if you look at the Brazilian real, they're about 11-12% on their federal, like our version of the federal funds rate. So if you look at go from currency, look at Brazilian real versus US dollar. What's that?
Yeah, right? No, you're right. We talked a lot about Nubank a couple of days ago, so you're fair on that. So okay, so final question then. Nvidia, what do you think happens tomorrow on Nvidia?
I have no idea, man. Nvidia is just Nvidia. I mean, I don't see any slowdown in demand. So I think there's still a ton of capex that's out there. People are buying, but I don't know.
All right. Fair stuff. Thank you, Kris. We will talk to you tomorrow.
Yep. Have a good one, man.
Yeah,
take care. Good luck for anyone who has Nvidia. Pray for me. I have a good amount of SMC. I took profits along the way, but I'd rather be in more profit. So hopefully SMC.
Well, you took out your initial, right? You took out
I took out more than my initial, so I'm good. Right. I have negative $66,000 on SMCI right now.
Right. So we'll see at 5:30. Hopefully this 10K's out. Feel
better, man. Take care. Have a good one. Bye.
All right, we're getting pretty demolished right here. Tesla just went below $1 trillion in terms of their market cap, 991, 308, down 6.7%. Robinhood down 10.8%. This one now officially year to date. Robinhood was up, I think, 65% year to date. Robinhood is now up 12.9% year to date. So about a 35% retracement right here. Hood below 45, down 10%. Nvidia 125. Nvidia officially below that 125 baseline level. Below 123 means it's below a $3 trillion company, which again, I do like going into earnings, but it is nasty to see this type of a decline, down 4% right here. Rocket Lab 1985. Rocket Lab down 11%. SMCI down 10%. HIMS down 28%. That one was 72. Palantir officially below 86. We are about $2 away from being right below where we were going into Q3 or going into Q4. At this point, Palantir year to date, I think, is basically flat. Palantir. No, we're still at 14%. Yeah, I forgot. We were at 60 in the beginning of the year. So, I mean, it's still up 14%. It's just not up 45% as it was before. And we're seeing some pain. We are absolutely seeing some pain. Microsoft below 400. Carnival Cruise below 24. S&P officially down 1%. Again, that picture that we pulled up was actually a good picture to kind of show that the rotation is happening. Let me pull that up again in terms of the heat map. Tech is the one that's getting hit the most. But pharma, banks, industrials, I mean, a lot of other parts of the market are pretty green. Even retailers today, ironically, Walmart and Costco are green. Even though you would think these are the ones that get hurt the most based on the perception of the consumer. Home Depot as well, up 3%. They had a good earnings and beat on the top and the bottom line earlier this morning. Aggressive stuff. Let's get an update from the suits, and then we will keep going from there and seeing what's happening here today. Let's pull this up right here and get this. All right, here we go.
Down to look below 4.3 on the 10-year. It is somewhat good news for the overall economy, though, to get buying of bonds because we've had rate pressures. Mortgage rates have been super high. We've felt it in the auto loans and everything else. That's why we know that the Treasury Secretary wants lower rates. Well, guess what? We have a growth scare, and that's what they're getting right now. I don't think the consumer confidence numbers help in light of the University of Michigan consumer confidence numbers, which also were worse than expected. Just to get it kind of confirmed in two different releases does make you wonder about whether that uncertainty is creeping into the minds of consumers.
Yeah, we talked with Drew Mattis yesterday in the 11 about average work week, and it was yesterday's print, but Dallas Fed work week is a new cycle low, thanks Lizanne Saunders. So we're going to start to put all these things together and try to create some narrative strings.
And the point there on work week and hours worked is that companies just hoarded so many workers because the labor market was so tight, and now they don't have as much to do with them, so layoffs could come next. Haven't seen that in the jobless claims numbers yet, but it's something economists are on guard for. We have that, and we have tariffs, and the tariffs creating the uncertainty. And here's what President Trump said yesterday about more tariffs coming soon.
We're on time with the tariffs, and it seems like that's moving along very rapidly. We've been mistreated very badly by many countries, not just Canada and Mexico.
So signaling that those 25% tariffs on Canada and Mexico, despite the fact that they were delayed and are being negotiated, he says are on time, same as the reciprocal tariffs. You know, the market, the dollar's weaker today. So you're not seeing the sort of panic moves that you've seen before when he has said that tariffs are coming. Maybe they think that there's room to negotiate. Maybe it's more of a growth concern than it is an inflationary concern. Either way, there's also, you know, this idea that companies have been preparing for it. Katie Huberty of Morgan Stanley, of research there, put out a great chart showing that toward the end of last year, companies were stockpiling on imports. The blue line is November, December. The yellow line is October. So as President Trump started talking, or at that point, incoming President Trump was talking about tariffs, and they started realizing that this was going to happen, they really started hoarding imports, right, to get ahead of those tariffs so they wouldn't have to pay more. Inventory levels are very elevated. That's only to say that perhaps that can alleviate some of the near-term pressure on prices, excuse me, that people are expecting as a result of tariffs.
Is it making, is it disguising weakness in GDP, at least in the current trackers?
I mean, it could be, right? Higher inventory levels, right? I mean, distort it, right? And then you would expect to give back a little bit later. So that's definitely a factor. It could also be distorting it in the way of boosting imports, which goes into the trade number, right? But ultimately, the question is, are we going to see higher prices? Are we going to see demand destruction as a result of some of these tariffs if consumers, you know, react to it? One thing's for sure, foreign central banks and foreign governments are watching carefully. Bank of Korea was the latest. They cut rates overnight. They sharply downgraded economic growth from 1.9 to 1.5% for their economy. And guess why? Exports and domestic demand face heightened downward pressures due to U.S. tariff policies and domestic political uncertainty. So our central bank won't talk about tariffs, but other central banks around the world are talking about tariffs. You look at an export economy like Korea, this stuff really matters.
So the tariff discussion is another reason why markets are getting hit currently right now. Again, Trump did talk about those tariffs yesterday, and that's been creating a little bit of that narrative it kind of died down first couple weeks in February, then it got reignited. So with his press conference yesterday, more people were thinking that was possible. So far, Nvidia got to 124.44, making a little bit of recovery from that. That is at 10:30, or no, not 10:30. That was at what, 10:26. No, 10:23. I want to see if the rest of the markets, we're getting very small V shapes from that 10:23 low. I know it's only 10:26. Probably need another 10-15 minutes to see if that actually is a little bit of an intraday low. Palantir, again, it touched 85.60, kind of at that same time, 10:23, moving on to 86.70. But what's happening every day is that we put in an intraday low around this time, 10 to 11. And then by 3:40 p.m.-ish, so 20 minutes until the market closes, that low gets violated. So it's kind of like the intraday low doesn't really matter during the day, because by the end of the day, market just ends up dumping. And we're seeing that happen right now. Robinhood going a little bit above 45, 44.02 again at that 10:23 low. Nvidia 125.70, Nubank 11.15. SMCI right here at 47.18, down about 8% currently right now. Yeah, a little bit of a 10:30 dump is happening here right now as well. Look, I mean, again, my opinion is kind of similar to Kris. It's just like, if you're heavily allocated to growth stocks like I am, you're going to feel some pain. And it is what it is. Now, long term, you should probably outperform from like Kraft Heinz, right, or Verizon. But in the short term, you kind of don't deserve to outperform if you're not able to handle these drawdowns. And this is just the nature of being a growth stock investor. And I think everyone understands that to an extent. If you are in a Palantir, an Nvidia, a Robinhood, a Rocket Lab, a SoFi, like these moves that double in 7 to 8 months, and for Palantir quadruple, like they only happen if you're able to deal with all the volatility that comes with it. Now, if you just got into some of these names and all they did was go straight up, probably a little bit of a stranger to some of the holding periods that a Rocket Lab, a Palantir, a SoFi, a Robinhood had when they were not going up and when they were flat for about 2.5 years. And so I think it's hurting those people the most. But nonetheless, like this is the nature of holding a growth stock. It will go up dramatically and it will go down dramatically, but you would hope over the long term it definitely outperforms the broader indices. You got to know your risk tolerance, as Melanie says. Yeah, you got to know your risk tolerance. It is absolutely the name of the game for how this ends up playing out. Why is everything down today? I don't think there's a reason. I don't even think it's Trump tariffs. I think we're just continuing the downtrend from yesterday. I mean, I'm trying to pull up a couple headlines to see if there's anything specific, but there's no like Home Depot earnings did not cause this. I guess anxiety around Nvidia is definitely creating some pain for people, which happens tomorrow, which is actually kind of normal. That happens every time before Nvidia earnings. Well, the consumer confidence, I guess that would be the biggest reason. Like the actual decline we saw over the past 30 minutes, I would say that's consumer confidence. Now, granted, consumer confidence is not a perfect way to gauge the health of the consumer. It is one way that the market looks at what's going on with the consumer. What the easiest way to know if the consumer is not confident is by Q1 earnings. If all the big retailers and food companies, the Starbucks of the world, McDonald's, et cetera, they have crappy earnings, then yeah, the consumer is having some issues. And that'll eventually affect hyperscalers, et cetera. Microsoft right here below 400. But that consumer confidence read, it is one way. It is not the only way to judge what's happening on a consumer. I am weirdly calm despite I lost 50% of my gains in one day. I'm just sipping coffee and nibbling on some dippy dip. Yeah, dude, it's like I'm pretty calm as well. I just feel like I'm very mellowed out because like when you see big numbers go up, you also get used to seeing big numbers go down. It's just like not that scary, especially if you think you're in the right companies and you're not like cracked out on margin, right? Like if you're not in any of those, if you're in a crappy stock and it's down 50%, you probably feel pain. if you're in a company where you genuinely just understand the company very well, which is why I don't tend to have a ton of positions because I try to understand the names that I own, then it's par for the course. That's what happens. Along with the fact that like it was like Robinhood and Palantir are still up so much this year. You know, like it's a lot of these names are still up a ton. SMCI is still up 25% year to date, even with this drawdown. You know, so it's just it definitely doesn't feel like August 5th. Sorry, SMCI is up 60% year to date. My bad. It's up 59%, even with this drawdown. It definitely does not feel like August 5th, where the entire year's gains went away so close to the end of the year, because that's when it's actually painful, right? Like you work eight months to manage a portfolio, and then within 2 hours, it's all gone, which is basically what happened on August 5th. But because that's so rare, that's why the dip became like the opportunity, because usually that doesn't tend to happen. But 2 months into the year, with most positions still green, even after this drawdown, I don't know how much there is to complain about when it comes to that. Teddy says, I bought Palantir at IPO and never got shaken out. This is okay. Yeah, I think that's fair. Chris says also February usually sucks. And see here, that's the thing. I think if you've been in the markets for a while, you know that February sucks. Like last year was the same story. February sucked as well. The problem is, I think everyone's expectations, including myself, I'm not excluded from this. Everyone's expectations, given 2024, got super intense. And now if Palantir doesn't go back to 125 overnight, everyone's upset. But I think also we have to be humble enough to realize like that's just not how it works. And although it felt like Palantir could never go down, or HIMS could never go down, or Robinhood could never go down, or SoFi could never go down, like, no, these stocks do go down. And like that is a very healthy part of the market cycle to see these stocks take a breather. I mean, the Qs being down from 540 to 510. I mean, I'm wondering what took it long enough to get here, because the Max 7's been decimated the whole year. So the Qs are kind of finally reflecting the pain of the Max 7s. But that's normal. Like that's not like the Qs shouldn't be that elevated going into the beginning of the year where the Max 7's not doing as well. Tesla currently 307, still below 1 trillion, 990.3. I just think everyone's expectations got really high, and it's human nature to have expectations go high, but especially if things have been just going so well. But it's okay for valuations to come back to normal and things to come back to reality as well. Amit, do you think Archer could be your fifth holding for 2025? Like the thing about Archer, although I am interested in the name, I think in this environment, Archer now down 10%. Like this is kind of why I never bought Archer in the first place, dude. This is the issue with buying companies that don't have anything fundamental attached to them, and it's purely narrative driven. Like there's no earnings on Archer. So like when everything's falling, everyone's looking at their portfolios. The first thing they sell is the stuff they know doesn't even produce any real revenue or forget profits, but just like anything, because it's a story. And when you buy a story stock, you are buying a startup that is public, and startups tend to fail. Now, I don't think Archer is going to fail, but the point is, if you're buying pure potential, you've got to be ready to deal with the volatility that comes with that potential, because if you're not a company that actually can show quarterly results because you have no results, I mean, like what is the reason to hold on to you? So the reason, no, I wouldn't be interested in Archer becoming a top 5 holding is because I don't know what I'm buying. Now, there is a bull case to Archer. There's a bull case to Oklo. There's a bull case to a lot of these names. It's just in this environment, that bull case, gets taken away pretty quickly if you can't put up earnings results. And I think, dude, because if you ask me if I'd better buy Archer or Google, like it would be Google, like just from a sleep well at night perspective, right? Even if Archer is theoretically has way more potential, it could double way quicker than Google can double. Yeah, but there's also some risk management that has to be deployed in the portfolio as well. The other reason I'm not big into Archer and some of these like speculative names, the quantum names, etc., is because I'm already overexposed to growth. I've got Palantir, Hood, and Nvidia. Like I've got plenty of growth in the portfolio, plenty of high beta names. I don't need that much more unless it's like a very, very small position. But it comes down to conviction, right? If you genuinely believe in Archer, then this is the dip you buy. But if you don't, then you kind of just stay away and wait till things normalize a bit. Are you adding Tesla, Amazon, Google now? I know you had talked about they were on your wish list. Yeah, but I think we need to see these things play out. I think like nothing I've seen in the charts of either of the 3 names that you mentioned, or of the Max 7, or of the broader market, has been bullish. I mean, same thing story with Hood, right? Hood would be the first dip I buy, given my conviction on it, and given even at 60, I thought it was relatively cheap compared to their growth. But I haven't bought that dip yet. So I'm not going to be buying any dip until I really feel there's a level of bottoming where I feel comfortable getting excited to get into these names. And that's okay. That's just being patient. Like that's not being antsy to spend immediately. Now, granted, put premiums I think are pretty high on these names, and I will be looking into thinking if there's any good puts to sell here. But the problem with selling puts is like, although the premiums get higher when the stock goes down, you don't know where the bottom is, right? So you may think 300 or 295 is a great put to sell on Tesla. I just don't think we have any evidence of it bottoming here at all. Jason will be on for Technical Tuesday today, and we'll get through a lot of technicals and try to get his updated targets as well. But we legit don't know when this stuff is going to tend to take a little bit of a breather or chill out a bit. Trump promised us the strategic Bitcoin reserve. Yeah, they have not given us that, and Trump has not talked about the SBR for a while, which is, it is what it is. I don't know if we're going to get that anytime soon, but as of now, he hasn't talked about it. Let's get a little bit more update from CNBC, and then we'll keep going from there.
Got some headlines from Bessent, actually. Have you seen these, Sarah, just hitting? Treasury Secretary Bessent says the U.S. economy is brittle underneath due to excessive spending by the Biden administration.
It's just what we were saying with Jim a little bit ago.
Yeah.
He wants to basically reprivatize some elements of the economy that were subsumed, he would argue, by the federal government under the Biden years.
Exactly. Concentrated in government adjacent sectors in terms of job growth. Goes on to say, Carl, something you talked about as well, though, that data suggests financial health is concentrated at the top of the economic spectrum.
Here's a chart that Kris sent real quick as well. I mean, this is another kind of basic argument to understand why there's volatility in February. Yeah, on average, 1928 to 2023, the S&P 500 has been down about 0.25% in February. Same thing in May, and then September, usually it takes a hit as well. So this really is a seasonal thing that's happening. And there could be more to the story than just seasonality, but at least for now, I think it's one of those things to remember that when we get into an extreme fear and we have this much pain, it kind of happens every time when we get to this this part of the year.
And we must swap economic growth from the government to the private sector, which
12:01 a.m. Eastern time. We'll see what happens then, guys. You saw the president announce these tariffs. Then he announced a pause in the tariffs. Now he's announcing that things might come back at that deadline time. We'll see where we go when we get there. The president likes to keep a lot of these balls as live balls in the air so he can continue negotiations. We just saw a headline from the Mexican President Sheinbaum in the past hour saying that she continues to negotiate and she's hoping for a favorable outcome there. So clearly this is a moving target, even though we have that soundbite from the president yesterday, guys.
I mean, it raises the question, Eamon, about why he wants to go forward on tariffs. Is it to get the concessions, for instance, the troops along the Mexican border, which it sounded like they were ready to make a deal with, or does he want to use it to raise revenues, which he's talked about before, to help fight off the deficit?
Well, he's said several different things, right? One is that he wants, the Mexican and Canadian governments to help in the fight against fentanyl. The other is that he wants it to help in terms of lowering the deficit, as you say. The other is that he said that he wants to use tariffs in order to increase U.S. manufacturing and just protect American industry. You know, all three of those goals are somewhat mutually inconsistent. The president cited all of them in the reason why he likes the tariffs. He likes the idea of tariffs, but when he gets close to that deadline, there's always a pause, there's always an extension, there's always a study to be conducted, because I know that the president watches the stock market very carefully, and he doesn't want to spark any kind of negative reaction there as well. So he wants to have his cake and eat it too, and that's tricky to do.
Eamon, we'll talk in a little bit. Lots to talk about regarding the budget as well today in D.C., Eamon Javers. And we'll talk more tariffs this morning with White House Senior Counselor for Trade and Manufacturing, Peter Navarro, in the next hour.
Here's an update on Tesla. I mean, one of the reasons it's down a bit is because Europe sales are not doing the best as well.
Slump in sales.
Well, this feels more like a Tesla-only story when you look at just this fall in EV sales for them that they're suffering across Europe, down 45% in January. The wider EV market in Europe up 37%. So rivals are catching up and performing outperforming as well in some cases, doing better than Tesla. And you just have to think, how much more is this a sustained issue for Tesla going forward, given the fact that you have Elon Musk, who's been very forthright in his opinions, particularly weighing in on politics, particularly in Europe. We've just had the European elections, which Musk has been very focused on. But across the piece, when you look at the performance for Tesla in Europe, it's not just in small countries. A lot of countries where Tesla has been performing badly, including in Germany, in the UK, where it has been lagging, and Spain as well.
How much of the impact, Danny, can be attributed to Elon Musk's politics, and how much is being swayed by consumer tastes or even Tesla's own internal inputs?
I put a poll right now in the chat. Do you think Elon's politics are hurting Tesla stock? Let's see what you guys say on that.
Well, when you look at the kind of input Musk has been having into politics, there has been some polling done which suggests there is a strong dissatisfaction with Elon Musk's views on weighing into very much national politics, national elections in Europe, and then on top of that, when you see the backdrop of Tesla upgrading its product line and the impact of them trying to chase more sales at the back end of last year, that means it's short on inventory. It can't necessarily sell as many vehicles or doesn't have as many in stock to sell. So there is that issue there of a confluence of impacts, which means that sales have been falling again.
All right, 86% of you say yes, it is hurting Tesla stock. Here's Peter Navarro on CNBC, but a decent chunk of you think his politics are not helping.
That has obviously been a good bet so far. Still like them after this rally?
I do. And I think in particular, the conventional wisdom that many have been speaking about for the last several months, myself included, by the way, has been that monetary policy is very much on the sidelines. I think now all of a sudden, with the challenges to financial conditions that we're seeing, is that monetary policy is going to move to the front burner again pretty quickly. We've now priced in a full cut in the Fed funds rate, an additional cut by the year end. We've done that in the last week or so as markets have started to anticipate that the Fed may react
Do you think
to
it'll
the
move up
environment that we're in.
even, I don't know, May? To May?
Quite possibly. Quite possibly. I think all of the early meetings that we're talking about not being in play, I think all of a sudden we'll be looking for a slightly different rhetoric, especially if we start to see the weakness in broader markets persist in the way that they have. So I actually think markets are thinking, if you look at kind of where terminal rates are a year and a half out, they're just under 375. It wouldn't surprise me if ultimately we get that repriced to a number more like 3.25, which is much, much closer to, I think, the Fed's own estimate of where the neutral funds rate is.
So if I'm a CFO or a treasurer right now, I'm like, Johnny, I got an issue, but I don't have time. I have some time. Should I wait? And what part of the curve am I best sort of going to get the best money from, bang for my buck, so to speak, right now?
So duration's been on vogue for a little while now. The way that the fixed income market structure in the US has evolved in the high yield environment that we've merged into over the last couple of years or so, one of the biggest drivers of our market has been annuity writing in insurance markets and in long-term savings markets. And that needs to get reinvested into the capital markets in the form of longer duration. So we've seen a strong bid in the long end of the curve, really for kind of a year and a half now. Obviously at a lower level of yields that we're at more nominally now, it makes it more palatable, I think, for issuers to consider. So I like the long end of the curve. I think that's where the bedrock of demand fits the best right now. But ultimately, if I'm sitting here and I'm looking at and surveying the environment that we're in, I don't think that I'm immediately rushing to run into the market. But at the same time, you've got to remember that the spread component of financing costs is still very, very close to multi-decade tights where we sit today.
Yeah. Where are we right now? And just put that in perspective.
Tesla is about to go below 300. That's nasty. It's $1 away. It's wild that in the morning I said, you know what, it looks like they want to take it below 300. And that's when Tesla was like 335. And I was like, well, it still kind of looks like, like I thought it would take a couple days, but nope. Couple hours, not even that. They are trying to take this below 300. If Tesla gets to 275, then that is where the stock would be before the Trump rally. So I think it was literally 275 the day that Trump got elected. I mean, It's $2 away from at least visiting that that below 300 range. And then the question becomes, all right, are there enough dip buyers? Are there institutions that get involved? Do the institutions let it bleed? I mean, all the institutions, the sell side upgraded this thing to 450. So they all think that they all theoretically should think that it's deeply undervalued. But the question becomes, do people actually buy? And if people take profits here? And I don't know which one is going to win here. The other problem with Tesla is, again, FSD and robots, that is the thesis. In the short term, we were talking about this a couple of days ago, right? In the short term, do those theses matter? And they don't, right? In the long term, they're, I would say, a more than a reasonable way to understand how this company could be one of the most valuable companies in the world. But in the short term, it's an auto business. And it always becomes an auto business when things get really dicey. So I guess we're going to have to see kind of how this bottoms out and where the buyers step in on this. I do think if it goes below 300, people would want to see it do a round trip back to where it was before Trump got elected. Like people would, like Palantir has basically done a full round trip from Q4 earnings. If the pump to 480 was never real, Palantir right here at 86, then I think a round trip to 270 would not be crazy. I also think if you're buying the dip, you probably want it to get to 270 at that point. I mean, just, you might as well take it even lower and really get a good price. But I guess we're going to see if that plays out. Doug says Elon's politics is definitely a reason for why Tesla is down, but it's not the main reason. It's more like 1 to 2% versus 15%. Yeah, I think people are polarized on that, dude. I think some people think that the stock from 400 to 300 is a result of Elon basically, dedicating his time to Doge in the White House. And other people think it's the auto business sucks and like Elon being distracted is not helping, but it's not really the catalyst for the stock being down. And I think people are very polarized on that. Like, you got some people that just absolutely cannot stand what he's doing in government. And you got other people that are like, we really don't care. FSD and robotics is the story. But eventually, market catches up to some of the pain that the core auto business is seeing. Yeah, a bunch of protests at Tesla dealerships is not helping sales. I mean, that is fair. There have been a lot of protests. I mean, I've seen just a lot of pictures on Twitter. I showed you guys a couple pictures yesterday, like graffiti, all this stuff. There are people that are getting hyper vigilant about expressing their pain for Tesla, or they're pain for Elon and using Tesla cars and charging stations as a vehicle to express that pain. Tesla's almost down 25% year to date. Tesla stock year to date, yeah, 19.8%. Basically 20% here right now. I live near a Tesla dealership. Protesters are now becoming a fixture there. Wow. It's wild, bro. I mean, look, it's funny because the Trump trade, SMCI down 10%. The Trump trade was seen as bullish for Tesla from the analyst. The analyst, Bank of America, literally went from 265 to 350 on their price target. And if you read the report, they wrote 10 pages, but the majority of it was just like, hey, we think Elon's going to be able to work with Trump to get stuff done. So it was like Trump is bullish. And based on what we've been seeing so far, given how Elon has so politically oriented himself towards this administration, European politics, German politics, etc., it's been a bit more bearish than bullish, at least so far. Now, granted, self-driving regulations coming down is going to be rather good for Tesla, I would imagine. That will add the level of value that a lot of the analysts believe, but they've got to get Austin done correctly. They're going to be competing with Waymo. I mean, there's just so many things that have to happen in that story to play out before I think the street recognizes the sort of main value of autonomy. What else? Robinhood's getting hit. Yes, Robinhood is getting hit. Palantir is still down 5% on the day, but it's not dropping below 85, 86.77. To be fair, Elon is in the White House, and that's still good for shareholders. Yeah, I agree. I mean, look, eventually Tesla's going to bottom. The question is going to be when. 301.41 got a little bounce right there from 306. Eventually, there's going to be plenty of people that believe that his relationship with the White House is good. That's a buy. But there's plenty of people that say it's bad, and that's a sell. I don't know. I mean, what price do you guys are here? Put in the chat. What price do you think Tesla bottoms at? Like, if you had to take your best guess at when Tesla bottoms, or not when, but what level you would say is a reasonable bottom. I don't think it's now at 307. I mean, I hope it is, but I don't think that would be the case. I think, yeah, if I had to pick, dude, 250 to 270, that range, just given that's where it was before, especially if Q1 sucks on the auto business and Elon can't pump it up and say that they're going to be bigger than the next 5 big companies combined. Like all those narratives that he talks about on the earnings calls, in a bad macro, no one's going to care. There's going to be not enough people to get excited about it. Yeah, 275 is what I'm saying for most of you. 275. 250 to 275, yep. Bottom of the current channel is 287. Yeah. I would say that's not crazy. Well, with Jason today, we'll have a better understanding of it as well. I'm trying to see what he says too. Okay, some people are saying this is all because of Trump. So here's a good question for everybody, because I've been seeing this comment a lot, that this is all because of Trump and like this is what Trump's America is creating. Do we think this type of pain wouldn't be happening under the Kamala administration? Like, I'm just curious, because like there still would be higher taxes, which would create a 4% hit across EPS on every single stock, right? I mean, Bank of America did some really good research saying that if they get corporate income taxes up to 28%, yeah, you're not going to see these EPSs as strongly as we've seen over the past 4 years with the Trump tax cuts from 2017. So I think this was one of those elections where it was like kind of pick your poison in regards to at least the economy. I get the tariffs thing people don't love, but the income taxes from the Harris administration wouldn't have been the best either. So I mean, like, it's one of those things where I'm not sure people can claim a victory lap 2 months into the Trump administration that Harris would have been that much different. The other thing I think people have to remember, and this was we can actually listen to Bank of America talking about this morning. Deregulation has not really been factored in. We haven't really seen a ton of M&A and IPO. The Harris administration would not have deregulated. We would not have seen tons and tons of regulations being slashed. We would have seen the opposite there. So that is a catalyst that we have for the broader markets. They haven't come into effect yet in regards to tons of momentum from deregulation. But with Harris, I think you would have had more regulation, higher taxes. With Trump, you're getting insane volatility because he's Trump and whatever he says can move the markets like crazy, and then tariffs. And I think you pick your poison there, right? I want Sleepy Joe back. Oh my gosh, dude. Oh boy. That's actually hilarious. Kamala may have hurt, but it would have been less painful. That's funny, dude. I want Sleepy Joe back. She wouldn't be talking tariffs or doing mass firings. Yeah, but like, this is where we all have to be a little bit logical here, right? The reason they're doing these mass firings is also because we have to cut costs. I don't care if you're a Democrat or Republican. We have to cut costs. And if we can't agree on that, we can't agree on anything. That the United States federal government needs to cut our costs, or we need to outgrow our costs. And most likely, we have to do a balance of both. If the government doesn't cut any costs, which in a Democratic administration, you would imagine there would be a bit more spending than not. That's just historically how it's been. And Republicans have spent a lot too. So this is the first time Republicans are even acknowledging like, hey, we need to cut with all this Doge stuff. And I know people don't love the way that Doge is going about it. I get it. But if we strip out the technicalities of how it's happening and just go to the principle of cutting costs, do we think that would have happened in a Harris administration? And if we're raising taxes or even keeping taxes the same, but we're not cutting costs and we're not really getting pro-growth because there's not a lot of deregulation, I'm not saying it would have been better than Trump. I'm not saying it would have been worse than Trump, but both administrations have their own challenges. And obviously, given Trump won and people are seeing the results right now, they're upset about the Trump administration. But it's not like one could have definitely been better or worse. I think it just is what it is. And now we're going to try to see how this ends up playing out. Here's Bank of America this morning on what they're thinking about deregulation as well.
Yeah, I mean, I think for the U.S. equity market right now, obviously multiples and valuations are very expensive. But I think, one reason that could justify higher multiples and be bullish for equities broadly is if we are in a more sustained productivity cycle within the U.S. And if we look at economic measures of labor productivity, or even an equity measure, if we look at real revenue per worker within the S&P 500, that's finally been increasing after this long period of stagnation. So that could impact a number of sectors, particularly financials. And, that ties into deregulation, which we think is the other bullish theme. And that's a theme that we don't think is really priced in right now. A lot of the sectors that have the most to gain from deregulation, like financials, are trading at, multiples that don't really reflect this versus sectors like tech that have been largely unregulated.
Here's the question I would weigh. And this goes to the financial sector, for example. So you would think that the capital markets right now should be going gangbusters in this sort of deregulatory environment. You'd see all sorts of interesting investments going on. You'd see IPOs coming to this place. You would see mergers and acquisitions happening. And yet, nada. Everybody says they have some kind of grand pipeline. I don't know if that's even true anymore. And part of that is a function, I think, of two major gating factors to this whole economy breaking out. One is what's going to happen with tariffs, one way or the other. And two, what's going to happen with taxes. Now, so the question is, are you, and maybe we get to the other side of that at the end of 25, maybe.
Right.
But there's also an argument to be made that we will be in some kind of tariff debate battle for the next 4 years.
Right. And I think that's one reason that maybe, you will see a bigger pickup in the second half. I think that for M&A IPOs, we have seen a bit of a pickup already. So there is the view that can continue if, we do see maybe less than feared on some of the tariffs.
January was a terrible month for mergers and acquisitions.
But in general, we've
terrible.
seen a pickup since last year. And, it has been some smaller acquisitions. It's been more concentrated in some sectors like healthcare. But, when you look at other sectors and in terms of healthcare and financials, right, where you do typically see a pickup in M&A under Republican administrations, we do expect as we move through this year that there is potential for a pickup as long as the macro conditions remain supportive.
Are there specific banks you'd buy?
Well, I think, financials overall, obviously some of the big banks have the most to gain from deregulations. They've seen a lot of, legal compliance costs that were added. When we look at just pages of federal regulation, how much they've increased. Right. The financial sector has seen so much more than other sectors. So from a margins and efficiency perspective, the sector has a lot to gain. And, obviously not good for us if we're replaced with robots, but eventually, this could be good for margins. So, overall, that sector ranks well in our work across large and SMID caps. But I do think for small caps overall, that is a sector there's a lot of optimism on deregulation. The tough part is, as you've said, this is a size segment that has underperformed because of the uncertainty recently around, tariffs, political uncertainty, and didn't necessarily see, outperformance last time we saw deregulation because of, tariff trade war and the manufacturing recession.
So it's kind of a sort of a dual-edged sword, right? Like Bank of America is bullish on deregulation, but if we get a trade war, deregulation doesn't help that much. So I mean, a lot of this stuff is going to have to be weighed against each other when it does go into effect. And we got a long year left. We are basically 2 months into the year. We got 3 days left of February. And then after that, we start the third month of the year. Tomorrow, probably the most important day of the year with Nvidia earnings. And I'll be live with Jose to cover it. But that is going to be determining a lot about the trajectory of the market over the next coming months. Nvidia right here, 126.92, Palantir 87.39, SMCI 47, Tesla 305. Hesitant to say that the sort of 10:30 dip was the intraday low of the day. I guess we'll find out on the market close how bad it gets or if it recovered. But we definitely do have some more pain as we are ending out today on the open. Earnings today, so that's it for the market open. I'll be back at 3:45. Earnings today is Kava, Intuit, Workday, Instacart, Lemonade, Axon, First Solar, Zoom Info, Coupang, and AMC. The most important companies there, I would say, are Kava for the consumer, Workday, enterprise software, that's important. Intuit, another enterprise software, that's important. Instacart, another consumer play, that's important. First Solar, kind of important when it comes to the energy markets and what's going on with SolarEdge, Enphase, et cetera. Axon, that's a big company I know a lot of people like. And then Lemonade for insurance. We'll see how they report as well. So those are the earnings we're going to be looking at today after the bell. My battery was exhausted. Okay, that means it's definitely time to end out the stream. All right, cool. That is it. I know it sucks right now. Everyone's going through it. We're going to have to see when these markets officially bottom. I really don't think we're going to get any insights. I think tomorrow's going to be ugly too until 4 p.m. when Nvidia reports. That report is going to make everything kind of come into fruition in terms of being continued pain or upside reversal. But I think we're probably going to continue to see weakness until we get that final report, along with the seasonality of February 2nd. All right, here we go. Word of the day. I have no idea how to say this. Tempestuous. Tumultuous or turbulent. The novel's plot revolves around the tempestuous relationship between an artist and his muse. The university experienced a tempestuous season of faculty protests and disputes. Obviously, if this means turbulent, then the market has been very tempestuous today. But it's the turbulence that you kind of have to deal with when it comes to being in the markets. So today we'll also have Technical Tuesday. So we'll have earnings for about 30 minutes, and then Jason will be on at 4:20. We will get into Technical Tuesday. We'll have a longer show today. I know last week he couldn't stay for too long. We will get through all the stocks that everyone cares about when it comes to the technicals and get his perspectives on where the markets from a TA perspective could be potentially going over the coming weeks, at least for now. All right, cool. That is it. SMCI also after the bell. Hopefully we get it at 4 p.m. I mean, their deadline is 5:30, so we'll see when it plays out. For Hood Weekly, the reason we couldn't do Hood Weekly yesterday is because Tanner was sick. So everyone's getting sick, dude. I was sick. Kris is sick. My sister actually took off from work today. She's home because she's sick. And Tanner was sick last night. So, yeah, like it is what it is. Everyone's getting sick right here. But hopefully we have Hood Weekly back on Saturday, and we can bring that back to everybody. All right. Thank you, everybody. I'll see you guys on the market close later today. Bye, everyone.